In this video, we will be talking about how to expand your Amazon or e-commerce business globally. If you are selling in US and you want to sell in Europe or in other Asian countries, also vice versa, if you're a European seller and you want to expand to North America or even like Latin American countries. There is a great company which can help you with expansion. It's called Zee. It's a complete compliance and customs and logistics service. If you decide to expand your e-commerce business, they can help you with every single step. And in this video, they will teach you a lot of steps you need to go when you do your global expansion, from logistics, product compliance, importing compliance, also taxes, because Europe has European VAT tax, America has different tax, and also Zee has a big network of partners which can help you with every other single step which Zee cannot help you with. So, as you understood, the main guest of this session is Zee. It's a company which can help you with a global e-commerce expansion. And this session I'm hosting together with Lisette Lees from Orange Click. Hello, Lisette.
Hi, Augustus. Really excited for today's workshop to go over some fundamental things I think all Amazon sellers should know. But I think there are also some of the newer news about some requirements regarding some compliance parts. So yeah, I'm looking forward to the sessions.
And now it's time to present the representative of Zee, is Rael Lowenthal. So he will be the very first speaker. We will have in total, actually I have a banner with all the speakers, so we'll have 5 speakers in total. But Rael, could you give us a short overview of Zee, just in general, with your own words? How do you help e-commerce and Amazon sellers?
Great, Augustus. Hi, Lisette. Hi. It's always good to be with Orange Click. This is probably the second or third time we've worked together, so this is really great, and hoping that we can bring some great value to your listeners, some actionable items regarding global expansion. So Zee, we're a compliance importer of record and logistics specialist for e-commerce businesses. We essentially help e-commerce businesses expand into international countries, so to sell outside of their local market. And we are a one-stop shop solution for doing that. So in simple terms, we ensure that your products are both legal for sale and import in the destination country. We act as your local importer or importer of record, or provide you with representation in the destination country by virtue of being a non-resident importer. We ensure that you are able to reclaim any refundable taxes. And then we can facilitate the end-to-end logistics as well. So picking up the goods from your warehouse or manufacturer and actually getting them delivered all the way to the fulfillment center, whether it be an Amazon fulfillment center or 3PL in the destination country.
All right, great. So what's coming here? Maybe it's important to mention that the whole the set of presentations is like a Monopoly game, right? Rael, could you give us a little bit understanding what we're gonna go through in the next 2 hours?
Sure. So the whole idea here really is to win the game of international expansion, and each of us on the Monopoly board go to the different parts on the board that explain the different elements of expanding internationally. What should you be thinking about? Some valuable content, some inside information that you may not be able to get elsewhere. We're going to be sharing with you today, and that's really to provide you with the knowledge of what to ask and to be able to ask the right questions when you are doing this, and hopefully you'll be asking us the right questions when you're looking to do it.
All right, so I think we're ready to start with the first presentation, and it's logistics, right?
That's correct. So I'll be talking about logistics. I think let's get straight into it. So,
and before you continue with your presentation, maybe you can give a few sentences about yourself, that people understand how you're related to logistics in Zee.
Sure. So my official title at Zee is Director of Business Development. What that means is I'm responsible for new client acquisition, as well as maintaining existing client relationships. My involvement in logistics, being one of the founding members of the company, I was heavily involved in setting up our logistics network for sellers to make sure that we had the right options for all the different types of sellers out there. So I've got quite a deep knowledge of logistics, and I'm hoping that given that it's quite a hot topic these days, I'm hoping I can bring some value from the knowledge that we have to the listeners.
Perfect. We're ready.
Awesome. Okay, so let's get into it. So how to pass logistics. So basically, if we get into the crux of it, what is logistics, right? So logistics is really the process of coordinating the movement of your inventory from the place of manufacture to the designated fulfillment center. So when a seller is looking to go internationally or sell internationally, there's really two options from where they can send their inventory. It's either their home warehouse, if they've already imported high volumes and that they're going to be sending smaller volumes out to the international countries, or it's making sure that they can actually pick it up from them, directly from their manufacturer to send to the destination country, Amazon warehouse or 3PL. So really, when we get into it, the things that we're going to be talking about, or that I'm going to be talking about, throughout, talking about logistics, is the type of freight that you're going to be choosing and the method that you use for transportation. What are the different documentation that's required for travel and for customs, and then a little bit of technical detail around how freight forwarders and couriers actually charge for how they actually charge for their service, and what do they base their rates on. Okay, so to start off with, the first thing that we should be talking about really is the difference between a courier and a freight forwarder. So on this slide, you'll see this is the characteristics of a courier. Courier services are really designed to send express shipments. So if you're sending smaller amounts of inventory, anywhere up to 70 kilograms, sometimes if you can find competitive rates out there, that could be up to 200 kilograms. But if you're newer at this, 70 would probably be the mark. Companies like DHL, UPS, FedEx, they're built for express services. Their main characteristic really is that they own the delivery assets. So any vessel that they use, whether it's a road, whether it's a truck or an airplane, they actually own the vessel themselves, and they do the customs brokerage in-house, meaning they have in-house teams that do the customs declaration once the goods actually arrive in country. So courier services are better designed for smaller weight, higher volume shipments, and getting your shipments on an express service, so as quickly and as efficiently as possible from one destination to another. The next is a freight forwarder. So some examples of freight forwarders that are out there, some of the bigger freight forwarders, Kuehne+Nagel, they have a partnership with Amazon actually, DSV and the likes of ART. Freight forwarders are designed to do bulk shipments, so bigger, heavier shipments, all the way up to, full container loads, which can be, between 6 to 10 tons at a time. And they actually don't own their own vessels or delivery assets. What they do is they book spaces on delivery assets. So a company like MSC Cruise Lines, they'll own a whole bunch of ships that are going to be traveling from China to the US, as an example. The freight forwarders out there book spaces. They go into the market, they say, look, what do you need to send from China to the US? And then they go book spaces on that vessel. And then they consolidate all of their clients' freight together and put it on that vessel. If you want to talk about it in the context of air freight, you'll have the big airlines like Etihad, Qantas, and the like. They have cargo divisions. So a lot of people don't know this actually, but when you do a passenger flight, when you actually get on an airplane on a passenger flight, often on that passenger flight, there'll be cargo going with it as well. So, airlines will so these freight forwarders will book space on the airlines the same way that you would book a ticket to fly somewhere. And then really the key difference here, I would say, between freight forwarders and couriers are three things. They don't, whether the ownership of the assets, who does the customs brokerage. So they generally outsource that to a broker in country. They don't have it in-house. And then it's about the size and weight of your shipments. So if you're sending pallet loads, container loads, obviously container loads, that would be via sea. But if you're going to do pallet loads, even if you wanted to do it via air, this would be much more cost effective to use a freight forwarder. The couriers are really designed for the smaller, lightweight shipments. Okay, great. So that's really the difference between a courier and freight forwarder. Then I think maybe just to go back to the slide, just some other items to consider before we move on. So in the world of freight forwarding, so related to this particular slide, the way that a freight forwarder actually books your shipment is quite technical. So you go to the freight forwarder and you say, I want to get my container from China to the US or China to Germany. And what they do is they actually have 3 parts to their transaction. They have to go and book a shipment with an origin office, meaning where are the goods coming from. So someone in China that owns a vessel in China, they're going to go book that container on that vessel. Then they're going to go and find a destination agent, that will do the local delivery, and that party can be both the local delivery agent and the customs broker or not. So sometimes, being the third element, it will be actually finding a customs broker in that country. And then they connect those 2 parts together, and then they take a little bit of a markup, and then that's how they make their money, and then they pass that rate on to you. So it's not this like kind of end-to-end thing, that happens all in one. They've got to find origin, destination, and customs broker. Whereas a courier that owns their own airplane, so like a FedEx, for example, they will use their own airplane out of China and then their own truck in the destination country in the US or Germany to get your goods directly delivered, and then they do the in-house customs brokerage. So they've got a more sort of all-in together service, whereas the freight forwarders have to put pieces together. When you're talking about the different types of transportation that a freight forwarder can offer you, and this is really specific to sea freight, there's 4 things that they can offer you. It can be door-to-door, which simulates like a DDP delivery duties paid, and I'll get into that a little bit later. But door-to-door meaning they pick up directly from where you want them to pick up and then deliver directly to you where you want them to deliver. Then you can have a port-to-door delivery. So often in the e-commerce world, or in just logistics in general, the manufacturer will get the pallets or container delivered to the origin port, so like a Shenzhen port, for example, and then the freight forwarder picks up the container from the port and then delivers it to the destination, and then the destination agent delivers it directly to the fulfillment center. You can then get a port-to-port rate, and often I think this is where there's a lot of confusion in the market. We see this quite a lot. Clients will come to us and say, I got a rate of X for China to US. And they compared it to the rate that we got, and ours was a little bit more. And what we realized in the end was actually the rate that they got was port to port, meaning the manufacturer had to deliver the goods to the port in the origin country, and then there wasn't a local delivery agent to do the local delivery to the fulfillment center. It was only going to be delivered to the port. So there were 2 parts of the delivery that were left out from their quotation. So it's very important to know when you're actually getting freight quotes out there, what are you getting? Are you getting door-to-door, port-to-port, port-to-door, or door-to-port? I know it's like a little bit of a tongue twister, but it's really self-explanatory. It's just a matter of where the goods are getting picked up from and where are they actually being delivered to, and what's being left out of the transaction if it's not a door-to-door transaction. Okay. One thing that you should take note of is if you're going to do, port to port, if you're going to arrange port to port, that means that you're going to have another forwarder or your manufacturer deliver the goods to the port, and then you're going to have another party that facilitates the delivery in country, in the destination country. And really, there can be room for error there because now you have to coordinate the handover of your inventory from one party to another. So generally speaking, for your own simplicity's sake and just to simplify your own supply chain, it's better to find freight forwarders that can do door-to-door deliveries for you. It will be less headache. It becomes their headache to coordinate the transfer of your inventory, not yours. And really, it's one of the things that we can do for our sellers, but I'm not talking about Zee, I'm talking about logistics. And last thing just to mention about sea freight, when you're getting a rate, one of the things that come up on your quotation will be lead time or delivery time. And delivery time is heavily influenced by whether there will be stops along the way. So often a vessel that leaves China will stop somewhere in India, then it will stop somewhere else, and then it'll get to the US, or then it'll get to Europe. And that obviously has this, it adds delivery time or time to your delivery. So whatever rate you're getting, just make sure you check that, if there's going to be stops along the way, that lead time will increase. And how that really applies to Amazon sellers is when you print a label for a shipment that you've booked on your Seller Central account and a certain time period has passed, that label expires. And now if that label is going to expire and it's already been put on your boxes or pallets while it's on the water, then you're going to have to try and arrange for someone in country now to take those labels off and print new ones and put new labels on. So very important there to make sure you understand exactly what the lead time is going to be, and then at what point you should be putting your FBA labels on. Okay, so the types of freight and their travel documentation. To be honest, this can get really technical, and I've left out the very technical elements of it. I think for the purpose of this presentation, it's just good to understand what are the different travel documentations and to which type of transport do they apply. So in the case of an air shipment, it's called an airway bill. That's the equivalent of you getting a boarding pass when you fly from one country to another. If your goods are moving via truck internationally, so from one country to another, you'll get a CMR document, a convention merchandise routier document. And then in the sea freight, it's known as a bill of lading. And there can be different types of bill of ladings. There's house bill of ladings, master bill of ladings. That's the technical part that I don't want to get into. But really, it's just for you to understand that when you're booking a shipment, your forwarder is actually going to provide you with one of those three documents. And generally speaking, you'll attach those documents directly to the inventory. Maybe not you, someone in your warehouse or someone at your manufacturer. Best to put that on, because that will allow the forwarder and the different parties that are actually doing the delivery, get them to understand, okay, where are the goods getting picked up? Where are they actually going? What are their characteristics, their sizes, etc. Okay. Great. Now the fun part. So this is really the basis on which forwarders and couriers will charge you for your shipments. So the technical term is called chargeable weight, and that is the higher of actual and volumetric weight. The best way to actually explain the difference is actual weight is if you stepped on a scale and that gave out a kilogram or pound weight. Volumetric weight is how much space you take up in a room. So if you were standing in a room and there were lots of tall people and not very wide people, you could fit more people in the room. If you were in the room and there were lots of wide people and not very tall people, then you wouldn't be able to fit as many people in the room. So, practically that's really how it works, and that's how it applies to freight forwarding or logistics. So a forwarder or a courier will get your shipment and they will say, okay, how much does the shipment weigh actually? If I put it on a scale, how much does it weigh? And then they will do a calculation to determine how much space this shipment is going to take up on the particular vessel. And we're going to talk about that in the next slide. Okay, so in this example, you've got 3 boxes that weigh 15 kilograms each. So if you put them on the scale, all 3 boxes, you'd get an actual weight of 45 kilograms. Volumetric weight is determined by the length, by the width, by the height, divided by 4,000 or 6,000. Don't ask me why different forwarders have one forwarder will use 4,000 and then the other will use 6,000. I honestly have no idea. They have their own way of doing their own profitability calculations based on the size of their vessels. But that's generally how it works. And in this case, I've used centimeters. If you're based in the US, you could do a conversion into inches. The exact same methodology would apply. And so you would say there are 3 boxes. Each of them have a length, width, and height of 50 centimeters each. So it's 50 by 50 by 50. You would divide that by the 4 or 6,000. And that would give you in kilograms what your volumetric weight is, meaning how much size are those 3 boxes taking up on the vessel, represented by a kilogram metric. And in this case, you can see that the boxes actually take up more space than they weigh. So your quote would be based on a 93.75 or 62.5 kilogram chargeable weight, because that can be quite confusing. You get back your quote and it says to you, you're paying $2.50 per kilogram. And you look at the actual weight of your boxes and you say, but hold on a second, that from a math point of view, that doesn't make sense. But the reason being is because those boxes are actually taking up more space than they are heavy on the vessel. Great. So just a little bit about Zee and how we interact with being a freight forwarder and why we actually talk about logistics at all, is because we're not a freight forwarder ourselves. We partner with various couriers and freight forwarders in the market that have extensive experience with e-commerce and Amazon deliveries. And we become your partner to facilitate end-to-end logistics. And obviously, because of the volume that we do on behalf of all of our sellers, we can get volume-driven discounted rates that would be passed on to you. But really, the idea here is just to give you some context as to why we talk about logistics and how we interact with logistics. One more thing I want to talk about on chargeable weight. There's just some sort of fun fact points that you should consider. If you're going to be sending anywhere between 15 and 20 pallets at a time, it might be better off for you to ask for a full container load rate. That might be more cost effective. There's also a thing called an HC container, a high cube container, and that's applicable to sellers who send pallets that are tall or that are stackable, because the pallet has the container has a little bit more height. So again, that could bring your rate per kilogram down slightly if you can stack your pallets and fit some additional inventory in there. All right, so now you have a little bit of an understanding of logistics, the context behind it. What are the different providers out there? How do these providers actually charge? Now, really, what you should be considering is, as a seller, what do you need to consider when you want to ship internationally? So the first thing that you're going to think about is, well, what am I actually shipping? Okay. And what impact does that have on the type of freight? So if you'll remember, we spoke about couriers being better with smaller, lightweight, more frequent shipments, and freight forwarders being better for bulkier shipments that have a larger time frame. So, if you're going to sell, let's say, iPhone covers that are small and light, then perhaps courier shipments are better for you. You can ship more frequently to Amazon, and obviously in the Amazon world, inventory limitations play a big part in the type of freight. So, but again, even if you have an inventory limit on a type of good that doesn't fit a courier model, it's still not going to help. So, if you compare that to maybe shipping plush toys that are, take up a lot of space on a vessel, then your chargeable weight is going to go through the roof, and in which case a courier shipment wouldn't be worth your while. And you would need to go look for a freight forwarder, whether you were going to ship that via air or sea. In the context of a courier, there's no need to really speak about sea shipments. That's not really what they do. It's more in the airspace. The next thing is the ability of your manufacturer to package and label for FBA, because if you want your goods picked up from your manufacturer, they need to label the goods and they need to be ready for delivery to FBA. If they can't do that, then you need to have a prep facility either in origin or destination country. The other thing is the destination country inventory limitations. So, and shipment package requirements. So, for example, if you were going to ship to a new country for the first time, generally Amazon will limit you to 200 to 250 units. And in Europe, for example, they'll only accept pallets that are Euro pallets. They have dimensions of 120 by 80 length and width. And then sometimes they also have a height limitation, and each country has different height limitations. The required delivery date. So again, if you need to get inventory quickly to an Amazon fulfillment center because you're about to have a stock out, air freight's the way to go. If you're not going to, if you have some more time, or if your goods are going to be temporarily stored before being drip fed to Amazon, then sea freight or sea cargo might be better for you. A thing I think that gets overlooked a lot in the e-commerce world is when the goods get picked up from the origin country, there's a formal export that has to take place. And if you don't have a business in that country, some business has to take on the responsibility for filing the export declaration. 99% of the time, your manufacturer will do that, but there are cases, we've seen cases where manufacturers won't do it, in which case sometimes the freight forwarder will do it, or you'll have to find an agent that will do it on your behalf. The other thing to consider is the import and travel documentation for customs. So your commercial invoice, your airway bill, your CMR, your bill of lading, is that attached to your cargo? Is it accurate? If it's not accurate, then customs are going to stop your goods. There's going to be delays. So just something to check over before it goes. Do you have insurance? So do you have end-to-end insurance? You can speak to your freight forwarder about that. Most of them will be insured. And if you want to take out additional insurance, they may have that as an option. Very, very, very important for Amazon deliveries. If your local agent that does delivery in the local country is not registered with Amazon for delivery, the goods will not get delivered there. And the process of to the fulfillment center and the process of getting registered with Amazon is not an easy one. And we've seen it multiple times where we have clients that book their own freight without us. Their local delivery agent wasn't registered with Amazon for delivery, and we have to kind of try and step in and, get our partners involved and save the day so that the cargo doesn't get destroyed or returned. So again, if you're going to be managing your own freight bookings, just please make sure that your local delivery agent is registered with Amazon for deliveries. Otherwise, you'll get into a lot of trouble. Last point here, just a DD, door-to-door versus international deliveries. It kind of talks to the port-to-port or door-to-door scenario. When you're shipping to an international country where you aren't located, it's very hard to do a DDP delivery without local representation there for import purposes. So there will be forwarders out there that say to you, we can do a DDP delivery, this and that. There's two things you really need to be concerned with. The first is if you need a local importer, your goods are going to get stuck at customs without a doubt. And if your freight forwarder has found a way around getting a local importer, there are those that do that, then are you going to make sure that the customs documents are prepared in a way where you can get your refundable taxes back? 99.9% chance you won't. And that can often equate to 20 to 21% in Europe of the import value of your products, and it'll completely wipe out your margins. Okay, so that's really that's kind of the end of my presentation. It means you've passed logistics. If there's anything else you want to know about logistics, please reach out to me, rael@zee.co. And now, Augustus, I'm going to hand over to you, and we can do the questions.
Yes, thank you. I will keep the slide on. Lisette, are you there?
Yes, I'm here. Thank you so much, Rael, for this presentation and all of this information regarding logistics. I first just wanted to ask a quick comment from you regarding let's say the past year and a half situation on the logistics and shipping products. How are things going right now, and what trends do you see? Are things getting a little bit better?
To this, I knew this was going to be a question. That's why I specifically left it out of my presentation, because I knew this was going to come up. The truth is, logistics has been chaos in the last year and a half. There was a point in time where at the LA port on the West Coast, there was a backlog of 250,000 containers. They had people working literally 24-hour shifts or doing consolidated shifts to get that backlog down. It has decreased. In the US, they've got an interesting situation because they've got a shortage of labor as well. So they kind of it was like a double whammy kind of delay, where they had all these containers piling up because there was lockdowns and things like that, and then they couldn't even find people to get it. Anyway, but it's the US. They've done that. They've managed to get through it. Container prices are still quite high, and I think a lot of forwarders out there have gotten used to these increased prices, and obviously that improves their profitability, and they would want to keep those prices as high as possible for as long as possible. So it is important to interrogate the rate you get, because they can probably do better. They just want to make sure that they're keeping their margins high. In saying that, China was recently locked down again, certain areas in China, and that anything coming out of China at the moment, there's really what makes it so hard for us is there's such a volatility in rates. So, on one day we'll say to a client, look, it's $9,500 to get your container from the US to China. And then 2 weeks later it's 25,000. And like, how can you, it's very hard to run a business like that. And I empathize with the sellers because it's not easy, and we're feeling it as well. So I don't know if that answers the question. The simple answer is there's no real, it's not where it was 2 years ago. We're hoping to see more calm in the market. The difficulty now, the added difficulty now, is that you've had a huge increase in fuel costs. So that's now kind of made up for the supply chain issues and the increased demand and lack of supply. So we hope that things will calm down soon.
Yeah, thank you so much for covering really those different elements that are influencing this whole situation. And I think I have one question that goes together with the part of your answer. So sellers who are currently doing product research, so what's the easiest way for them to estimate the product's transport cost from China to US if they're still, let's say they have an idea and would like to estimate it?
So in the good old days before COVID, you'd have a forwarder that would give you a rate card that would last you, a month, 2 months, maybe up to 3 months, sometimes even longer. In the world we live in today, the only way to estimate your product's transport cost is to request spot rates. It's the only way. There's very, very few forwarders out there that are giving longer than 2-week rates, and those are only to really their best clients, like the clients that are doing a container a day or more. So go out to different freight forwarders, ask for different, multiple quotations. There's a lot of freight forwarders out there. You'll find a competitive rate, but you got to know that in 2 or 3 weeks' time or a month's time, that rate may no longer be applicable. So it's important to get an updated rate before you execute or before you actually do the shipment.
Okay, very good. And for the viewers as well, please type in any questions you have regarding logistics. Not only will Zee answer your questions, you will also participate in a draw that we will do a little bit later for $1,600. So let's take another one. So about Brexit in UK, what exactly changed with sending goods to UK after the Brexit?
Okay, so that really depends on where you're based as the seller. If you're based outside of the UK and more specifically in the EU, because Brexit was the UK exiting the European Union, it meant that your goods are no longer in a free trade zone, meaning they can't. It's not like sending your goods from Germany to Italy. Once they imported, you can send them anywhere in Europe, right? Any to the 28 European member states, which UK was one of them at a particular point. Now there's a formal import process that has to take place at UK customs. So for UK sellers, it's the other way around. So if you're a UK-based seller and you wanted to import into Europe, before Brexit, you could import into the UK and then just truck it across, no formal import or customs that needs to take place. Now you need to import directly into Europe, and you need local representation for customs purposes to do that. And then, I think that answers it. It's mainly focused on UK and European sellers and how it impacts importing into either place.
Okay, very good. So how much faster is an air shipment from the sea shipment? For example, when shipping from China to US?
Significantly. So China to the US, if you're not stopping at any ports along the way, you can expect a 35-day delivery time. There are some forwarders out there that might do a slightly like express shipment, so maybe that gets down to 28 or 25 days if you're lucky. An air shipment can be within a week, including customs clearance. So there's really a significant difference between sea and air.
Okay, very good. So Yannick is asking a question. Please explain the booking process. For example, if you book at one rate and your products are ready, does the rate change if backlog prevents the sailing weeks or even months later?
So this is going to depend on your forwarder. So when you request a rate, generally on the invoice, it'll tell you this rate is valid for 14 days, 30 days, whatever it is. When there's specific, out of control circumstances, maybe like a lockdown or something like that, and there's delays, there might be specific terms and conditions around how the rate changes as a result of something that was out of the forwarder's control. So I would just speak to them, make sure you understand that before you book the shipment. But I know that in a standard transaction, when you request a rate, that rate will be valid for X amount of time. Most common is about 2 weeks.
Okay, very good. Hope that answered your question.
All right. So I think that's it with logistic part. We have a few more questions which we will ask at the end of this long workshop. And I know that Rael now has to let other speaker in the studio. And Zee, as you maybe already understand, is a compliance, customs, and logistics service. It's basically a one-stop shop for you if you want to expand globally. And of course, all the links you will find below. Also, if you enjoy the content, click the like for this video and subscribe to our channel. Now I would like to play a very short clip. It's just 40 seconds, which will give you a very good overview of what Zee is offering to a global e-commerce community.
Zee simplifies global compliance and logistics for e-commerce sellers. Our complete import solution is the missing link between you and international success. Safeguard against delays and unforeseen cost when partnering with Zee. Enjoy first-time customs clearance and excellent customer service. Our Zee team is here to guide you every step of the way. We remove the fear and uncertainty from importing, allowing you to reach your true potential. Expand your empire with speed, ease. Zee.
All right, and we have our second speaker from Zee, Mari. Hello, Mari.
Hi, Augustus. Hi, Lizette.
Yes, and in the part 2, so we are starting part 2, we'll be talking about product compliance. So I think, Mari, the best would be if you could, start with introducing yourself and then, just continue with your presentation.
Perfect. So my name is Mari, or Mari-Louise is the long word if you're looking on LinkedIn, or just Mari. I'm the Managing Director of Zee. Started together with Rael last year when we were building Zee out, and very excited to be speaking to you guys today. I probably have the most boring topic out of every one of the group, but it is something that I'm very passionate about. It is product compliance. I work very closely with the team who are building out our product compliance database and our network. So it's a very exciting topic for me to speak about. My goal today is to make it seem a little bit easier than it is, but to also highlight some of the risks and the compliance information that you as a seller would not necessarily know unless someone tells you. I think the worst thing always in a product compliance space is or in e-commerce as a whole, is when you're trying something new and you get to the point where something happens and then only you find out you need a document or a license or whatever in that case. And my goal is just to make you aware of a little bit more of the compliance requirements that you would require when you're shipping to a new marketplace, so that it's not as scary when you go the first time and you know you're ready. That's my goal.
I would actually say product compliance isn't boring at all, and I really hope you bring in very important information, because I know for years it has been super difficult to find relevance and good, reliable information about product compliance, because we know that you don't get all the information from Amazon itself. So I'm very excited, and I hope the viewers are as well.
Thank you, Lizette. Thanks.
So we are ready, and here are your slides.
Okay, perfect. So avoid being charged with product compliance penalties. I think on the Monopoly board, we have it as the product compliance jail. So for anyone who's seeing that, I think the unfortunate thing in the Amazon space is that you don't get out of jail free card for compliance, unfortunately. So our goal is to help you get through that without having the struggles that you have as an e-commerce seller. And I have a few steps that I want to explain on what compliance actually means, but there's 5 common misconceptions about product compliance in the e-commerce space, 5 big myths that I just want to smash right at the start. And I'm hoping that you don't fall in the trap of believing these myths when you get to the point of going to a new marketplace. Right, so the very first myth is that I don't have to worry about my compliance if I'm sourcing or reselling goods. So we have a lot of sellers who come to us who they're not the product label owners. It's not a private label product. They didn't create the product. They didn't go through a product development phase. They find a product on one of the tools, so Jungle Scout, Helium 10, etc., Smart Scout, and they find a product that does well in a market, source it somewhere, and then sell it, right? And a big misconception is that your product compliance rests only on the manufacturer in that, and that it stays the manufacturer's responsibility. But this is unfortunately not true. There's so many tools that can help you get the right product into a marketplace, but there's not a lot of tools that will tell you what you actually need when you get in. And it still stays your responsibility as the seller. You are the one moving the products from market A to market B, and you're the one opening it up for sale and listing it on whatever website or platform you are listing it. And that means that you are responsible for the compliance of your product. So anything that happens after the product is sold still stays on your shoulders, and it's still your reliability or your responsibility. The importer bears the risk of product compliance, meaning you bringing it into the country, importing into the country is where the product compliance lies. So it's important to know if you are sourcing or reselling goods that it's still your responsibility, which a bit trickier, right? You're not the person who created the product. You don't know what goes in and what goes out, but that's where the extra research comes from, a product compliance background. If you have someone who can do that for you and get those little small things in place, you will be the right person to sell the product in this new marketplace. Right, the next one is that your goods cleared customs and all is well with your product compliance. The very first thing is that you have to split product compliance into two categories. There's product compliance for import and product compliance when you sell your goods. Import compliance is physically what you need to show at import when your goods arrive at customs. And this might be certain testing, documents, etc. And when your goods clear customs, it means that it is imported, right? But there's still a lot that happens afterwards. Just because your goods cleared customs does not mean it is legal for sale. And I think the big misconception is that your goods are in, it's listed on Amazon. Amazon did not suspend your listing. You can sell your goods. And that's actually incorrect. Amazon itself has certain checks and balances in place, but they don't take responsibility for your goods. They don't take responsibility for the sale. So that's still your responsibility as the seller to make sure that your goods are allowed to be sold in that marketplace. There's things that you can get through on a customs level, but if something happens afterwards, when someone actually buys your product, there might be a few things that you have to look at there, and we will be discussing those a little bit later. Right, the third myth. My goods were not compliant for import, but it cleared customs, so it will always clear customs. We get this quite a lot, where my goods came into customs, it cleared 5 times, and now the 6th time something happens. And the reason for this is that customs authorities have internal thresholds to allow non-compliant goods to clear. So certain customs authorities will allow up to a certain number of shipments to clear for a specific product, seller, or business. And then there's a certain threshold where they will stop allowing the goods to clear. And it also depends on the frequency of your shipment and what you are actually shipping, right? Some customs agencies, on the flip side, only investigate on a sample basis. So they don't investigate every single shipment coming through. So your shipment that cleared might not have been the one that was selected, but your next shipment or your 4th, 5th, or 6th shipment might be the one that is selected. So please do not fall into the trap of thinking that once your goods cleared, it will always clear. In this instance, there might also be regulations that came into effect in between a shipment. We see this quite a lot in the e-commerce space, where something happens and the customs authorities realize that they need to make a change in regulation. And that change can be very quickly adaptable. And even though there might be an effective date, for example, with the EPR licensing coming into play in July, even though the effective date is 1 July, it goes through a slower process of it being implemented by customs authorities. So for the first while, they might let a few things through while they're still busy making sure the processes are right. But there will reach a point when you will have to make sure your goods are compliant and it won't go through a next time. Once you are flagged, it also adds a little bit of extra complexity. If your goods are flagged once, you might be struggling with other goods of that same nature again in the future. Right, number 4, if I have all my compliance documents, I do not need to worry about my product labels. We get this. This is probably the biggest reason why goods are stuck at customs for like compliance reasons, if it's that. A lot of times what happens is that you have your documents, your certificates, your trademarks, everything that you need to actually import, but you have some wording or claim on your product or on your box, your packaging, that gets flagged by customs. We see this quite a lot when it relates to items for kids or for pharmaceutical items. Like a practical example is that we had a seller who sells a balm that you put on your joints, and they had a like wording on the product that said this can help with pain. And just because it said it can help with pain, it was stopped at customs because then it's believed that there's a pharmaceutical item in that product. So a claim that you have on your product will always be investigated by customs. If you think about it, it's the easiest thing to see when it reaches the customs point. It's very easy for a customs official to look at your box and see exactly what you wrote outside on the box. So the claims that you make are definitely very important. And there's other things that you will need to have on your product label for it to be imported. For example, if it's a language, if your product label is in a language that the customs authorities can't understand, they will definitely stop your box and view it. And in certain instances, you will need to have the specific language of your of the country that you're shipping into. For example, if you are shipping pharmaceutical, beauty, cosmetics, food products, and you're shipping into France, your goods may be required to have a French description on as well, so that the customs authorities can understand it. And it's also a sale requirement for when someone buys your goods and actually views the box to understand what is happening with your product. The last thing is that country of origin might also be required to be put on your box. And we see this quite a lot. It takes a lot of time in between the process to realize where country of origin is necessary on a box and not. But the country of origin, especially when you're shipping into the USA, is a very important concept, and you need to have it visible on most of your products. For example, beauty products, textile products, a country of origin label will become very important in this instance. Right, and then the 5th and last myth, if I legitimately bought the goods, I do not need a trademark to sell them. So in certain instances, there's trademark goods like Nike goods, Disney characters, Tommy Hilfiger, etc. And if you have a trademarked private label good that you're selling and it's your own trademark, it's very easy to prove that, and that will be acceptable by customs. But if you are selling a trademark good that you bought from another entity, you might need extra permission to sell it. So there's a few ways in which you can do this. You can either get permission in writing that you're allowed to sell the trademark item. You might be able to show that it's from an authorized reseller. But if you are sourcing goods and it has a trademarked item or branding on, especially when it comes to things like Disney characters, if you're selling a product and it has a Disney character or princess or something on the box, it will definitely be stopped by customs. And you will need to produce evidence that you are allowed to resell that product. And this is quite a big issue when you're starting to sell very recognizable brands. And the biggest reason for this is that the customs authorities are trying to avoid counterfeit items being sold. And the only way they can really prove that is that you show permission that you were allowed to resell the goods. So it's quite important if you are sourcing goods, and especially if it's a trademarked item, make sure that you approach the entity or approach an authorized reseller to get the necessary proof that you are allowed to sell that product. Right, so in saying that, the 5 myths are now out of the window, so we can go into the actual 6 important steps for getting your product compliant. At Zee, we like to split these into the 6 that you see on the screen. So the first is safety, then documents, testing, labeling, representation, and environmental legislation. So if we jump into the safety first, I think this is probably the trickiest part to prove and the most overlooked. It's not always documentable. So some of the safety regulations like GPSD, REACH, for example, you don't necessarily get a certificate saying that you are REACH compliant or you are GPSD compliant. So it's difficult to prove when your item is compliant, and it's not always a testable or proven statement that you need to have. And that's what's so easily overlooked. I think safety is crucial when you are selling to a consumer. So if you are selling on an Amazon, Shopify, wherever platform, it will reach an end consumer eventually. And you have to make sure that that end consumer, when they consume the product, it's safe for their use. This is especially true when it comes to pharmaceutical items, beauty, cosmetics, any items for children, any food items, supplements. And you can just imagine the consequences after that. And very important, even though your country is your goods are safe for one country, for sale in one country, there's legislation differences between countries. So you need to make sure that once your item is safe for one country, you also take into account other countries when you do that. If you are creating your own product or developing your own product, it's very important to also take into account other countries' legislation while you are making sure your product is compliant. And the way you would go around doing that is making sure that it complies with the overall safety act of the country. So each country has its specific overall safety act. There's overreaching acts for the European environment, for UK, etc. And it's easy to find that on the government websites or the import websites. An overall safety act is the best place to start. That act will then guide you to more and more deeper level of safety that you could require. Where do you get your safety requirements, or where do you put it? So if you are buying electronic goods from manufacturers, you can get and put the safety requirements on those sheets. It's also important to put the safety statements on your manuals, your registers, etc. And then if you are selling something that there's a warning that you have to put on, it might impact your labeling, which is the third or the fourth item that we're also looking at today. Okay, then number 2, you have to look at your documents. So a document is any physical piece of paper that you have to show at customs or when it's sold to get your goods in. So like I said, there's a long list of documents that you might need for certain products. These are permits, licenses, some approval documents, for example, approval to sell or approval to distribute. Certificate of origins, which is quite a big one if you are selling anything from China origin or from an outlying country. Certificates of conformity meaning that it conforms with a specific standard, act, or safety legislation. Proof of registration, if you register your item with a specific authority. For example, if you are selling pharmaceutical goods, you have to register it with a specific authority in the UK or in the EU. If you're selling food, it needs to be registered. So a proof of a registration will be very important. A notification of import. This is specifically if you're shipping food or regulated items, that you have to notify the customs authority that you are importing these goods so that they are ready when it comes to customs with whatever testing they would require. Manuals, which we see a lot. The customs authorities and agents really like to view manuals at customs because it is a very quick and easy way to find out if everything is fine with your products. And then lastly, certifications of testing. If you require certain testing to import your items, you would need a certificate to show that. And this is where the testing might come before the documents, but they might impact one another. So for certain documents, even though you need the document, you might need a testing certificate to go with that document. So you'll need to check both when you are researching what product compliance you need. Where you can get these documents, so most of them will be available to you if you submit your product to an agency or if you are testing your products. But there might be products which you can self-declare certain documents for, or there might be products where you can source them from your manufacturer. Then the last type of document is which you have to apply for. So if there's an approval or a license or a permit, you might need to apply for the specific document with the relevant agency or governing body of that country. Right, then testing. This is very important if you are a private label seller. If you are trying to get your goods into a country for the first time, you as the product developer knows the product best, and you would know what is in and out of that product. Every harmful substance, or if it's like a flammable type product, especially if it's textiles, will need some sort of testing to be done. And if you are the product developer, I would suggest that you think about your global sales before you start to test. If you are testing your product and you expect to only sell in, let's say, the US and Canada, if you are ever going to sell in another marketplace, just think about the testing that you need to do at that point already, because it might save you in a while when you are redoing testing, and it's very expensive. So I would rather just say test once and make sure it covers all the marketplaces that you are trying to move your products into. If you are not the manufacturer of the goods, it's very important to get your manufacturer online to make sure that they have the certain testing certificates that you need. And you can also send products for testing yourself. That is also a possibility. But if it's done already by the manufacturer, it will save you a lot of time and money to do that. So maybe just check with them if they have some sort of testing that is done already. Then, like I said previously, some documents you can only complete after your testing is done. So maybe check the two together to make sure that you are safe for that. The types of testing, there's general product safety testing. So for the safety standards that I mentioned previously, you might need to test that the product is safe for use. So there might be some general product safety testing. There's some children products testing. So for a CPC certificate to sell your goods for any children under the age of like 14, 12, etc., there's certain standards. You will need to show a testing certificate as well to ensure that it's safe for children's use. There's some flammability testing, especially if you're shipping textiles. And then lastly, if you have any prohibited or illegal substances in your product, or that you prove you don't have them in your product, it will need to undergo some substance testing as well. This is specifically if you are trying to ship any chemical type goods, so hand sanitizers, for example, you might need to show that there's only a certain level of a certain ingredient in that product. If you are selling electronic goods, you might need to prove that there's only a certain level of electronic frequency or radiation that's submitted by that product. So it might have to go through some testing procedures to make sure that that is true. Right, then labeling. I can go on and on and on about labeling. I have a few tips that we've seen with some of the sellers that I would like to give. So like I said previously, a label is very important. It is one of the most common reasons that we encounter a stuck shipment or that a shipment takes long to get compliant. Because if your labeling is not right when it gets to customs, your goods will have to be shipped all the way back to where you're based or where your warehouse is based, and you will have to redo your labels. The easiest thing is adding a sticker. So in certain circumstances, not always, you are allowed to add a sticker to show something. For example, if there's a specific country of origin that you need to show in a country and you haven't taken that into account in your labeling, you can maybe add a sticker to show that, or you can add a leaflet or a manual in your packaging. For example, if you need different languages on your packages, it might be easier to just include a leaflet or a manual to explain those different languages than to relabel your goods. It's not always the case. In some circumstances, you might not be able to do that and you'll have to relabel your whole good, but it might be something to consider if you are buying something from a manufacturer and you can't relabel. Then make sure that your labeling is not misleading. Don't put anything on your product label that you wouldn't have a certificate or a document to prove. This is especially true to claims. If you have any claims on your product saying that it has 50% of this or it has no sulfates or things like that, make sure that you have a test to prove that, because that will be a misleading label if you do not. And then make sure your packaging itself is non-hazardous. And this comes into play with the environmental point a little bit later. But while we are on labeling, make sure that you're not doing anything that would cause a hazardous substance to be in your packaging. Then the common types of requirements that you would need for your labels is mostly ingredients and composition. If you have a material item like a textile, you'll need to show how much cotton or nylon is in that product. Country of origin, this is very, very important in most products, that you need your country of origin. Warning labels, instructions on your labels, and certain markings. The markings are very important when you're shipping anything that requires representation, which I'll speak about a little bit later. But you might need to put in certain markings like a CE marking if you're shipping an electronic good, any type of WE marking, so WEEE, to dispose of waste, so waste disposal marking, a recyclable marking, anything like that can become very important. And also make sure that you have the necessary approval to put that marking on your label. The products with the biggest labeling restrictions is cosmetics, pharmaceuticals, food, and children's products. And I think this is also a common theme across the board, that these 4 product categories normally require the most product compliance out of all the other categories. Right, then representative agent. This is someone who's going to be responsible for your product. So if you're thinking about it, if you're based in that country, if you weren't shipping to a new global market and you are based in the country that you're selling in, so let's say you are based in the US and you're selling your goods in the US, you would need to be responsible for that product, right? And you are based in the US, so it's easy. If there's something wrong with your product, someone can just call you and ask the questions that they need to ask. But if you're not based in the country that you're selling the good in, they're not, the customs authority in 2 years, 3 years time, when they need to reach out to you, would not know who to reach out to. And this is where the representative agent or responsible party principle comes from. So for this reason, most countries have introduced this concept for many products with higher product compliance. And these types are normally those where you will have a severe effect on a consumer if something goes wrong, right? So if you have an electronic good and let's say there's a battery in the item and the battery can explode, there can be severe consequences. And in that instance, the customs authority will need someone in the country speaking their own language who they can contact for these goods. So representation is normally someone who's based in the country that you're trying to sell into. And these agents will take all the necessary responsibility for making sure the products can be sold on the market. They will do the necessary testing, licensing, keep the documents, and most importantly, answer questions on your behalf. And this is a very important thing to consider. There's a lot of sellers who don't know about representation being needed, especially if you're shipping into the EU or the UK and you're shipping food or cosmetics, electronics, etc. And this is also true for FDA approval in the USA. If you're not based in the USA, you will need an FSVP agent to ship your goods into the USA. If you are not based in the EU or the UK, you will need an authorized representative, or you might need a responsible person for food and pharmaceutical items. The WEEE agent, like I said earlier, so WEEE is for anything disposable, batteries, electronics, etc., where you need any like an extra agent to help you get that marking. And then lastly, a marketing authorized holder for pharmaceuticals, pet type products. I think the most interesting product that I've seen so far is pet eye drops, and the client had quite a lot of issues to get their pet eye drops into the country that they want to ship into, mostly because of this concept, the representative agent, because you can imagine that pet eye drops can have a lot of severe effects on a consumer, on the pet. And for that reason, there would need to be a representative agent in the country who takes responsibility for that item when something goes wrong in the future. Right, and then lastly, environmental legislation. So the Extended Producer Responsibility Act is coming into play, or it will be required by Amazon from 1 July 2022. And this will impact your packaging, your waste electronic equipment, etc., especially in France and Germany. But we are expecting this to be adopted on a wider range of products. I would already start taking this into account while you are preparing your new product launch, if you are launching anything for Prime Day this year, because environmental legislation will only increase. It will definitely not go away, which is perfect because there's so many packaging restrictions that would definitely be best for you and for the consumer in the end. I would take it into account from now. Like, I think I'm also very pro environmental legislation. So take it into account while you are trying to get your products onto the market first time. And thereafter, you will have very, very less, like much less requirements to take into account as these extra countries in the EU, etc., start adopting the extended producer responsibility. Okay, perfect. So just to summarize, the 5 product compliance myths that we smashed is that, firstly, once you get your goods in, you don't have to worry about the product compliance. If it cleared customs, all is well. That's definitely a myth. That you don't have to worry about your product compliance if you are sourcing or reselling goods. We smashed that one. You will definitely be responsible for it. That your goods are not compliant for import, but it gets in once, and that you think it'll get in every time. That's definitely not the case. If you have all your compliance documents, you don't need to worry about your labels. Like I explained, labels are very important. And then if you legitimately bought the goods, you don't need a trademark to sell it, which is definitely not the case. And then the 6 product compliance categories is safety, documents, testing, labeling, representation, and environmental legislation. And I would definitely take that last one into account. So see, we have 5 there. We'll put 6 the next time. And I think it's a good instance now to start taking environmental legislation into account as well. Where Zee can help with all of this is that we have a product compliance service. We have a team of lawyers who understand the legislation that you as a seller do not need to worry about and not need to be skilled up to read. And we have a team that can help with this. We have a subscription service where you can load your products onto our service and then get them ready and compliant as you go through and sell them, not only for import, but for sale as well. We have a variety of like testing providers, agents, etc., that can help you with in-country items as well. So we definitely, if you have any product compliance questions, you can reach out to me. I'll put my email, etc., on the screen, and I'll be very happy to help with any product compliance questions.
Thank you very much, Mari. So yes, everyone who wants to connect with Mari afterwards, feel free to take a screenshot or write this contact from the screen, which you see. We do have a few questions. Lisette will lead them. And I wanted to remind everyone that all the questions today are participating in the draw of a prize. A prize will come from one of the Zee partners. We will talk more about Zee partners in the next part of this long webinar workshop. And as a reminder, Zee is a company, is a one-stop shop for any e-commerce and Amazon business global expansion. So if you want to expand globally, actually, Mari, what geographies can you help to expand to? Like probably outside Amazon as well, right?
Yeah, so our main base is anywhere where Amazon has a fulfillment center. So everywhere in the EU and UK, USA, Canada, Singapore is on our list to do next. Japan and Australia. Those are the countries that we're based at. But if you have any that we need to start looking at, the more people ask, the more we look. So there's definitely a few more that's on the list to be added soon.
Perfect. And I saw a few more questions there.
Yeah. Before I will take the first question, I wanted to say that Zach is thanking you for explaining this important part. It was very useful. So people are enjoying your
Thanks, guys.
presentation. All right, so let's take the first one. Do you have any information on compliance for organic foodstuff into the EU? And for example, tea is mentioned as a product.
Sure, there's a lot. Like I think I can probably go into it, but I think the best part is if it's a foodstuff item into the EU, the first step that I would say you need to take is that you'll need a food business operator. So it's one of the representative agents that I've listed previously, specifically tea. We've actually researched tea recently into the EU. I would say what you can do is we can get maybe just your ASIN or your product code of your product and a little bit of information, and then our team can do some in-depth research. Unfortunately, there's like I said previously, one small ingredient can change it from being very little product compliance to much more. And I think the team of lawyers, I'm not a lawyer, like I'm passionate about it, but I'm not a lawyer, would be better placed to help with something like that.
Okay, very good. So let's take another one. So how is labeling a small pest repeller battery-operated device with flashing light? Should the WEE number also be clearly shown on that device's label? I import from China into Germany. Perhaps you know.
As far as I know, it's not necessarily a requirement as long as you have the WEE marking, the disposable marking on, and you have the necessary document that has the number on. You should be fine. It might be necessary to import into Germany to show the WEE number when you import. As far as I know, it's not. I will find out and also make sure if you don't mind, you can send an email and I'll just get back to you on that one. But it's in my as far as we know from the clients we've dealt with, it's only the WEE little dustbin box that needs to be on the item.
Okay, very good. So Patrick has also a question. How do you know which labels are needed on your product?
So there's always some legislation that that guides the labels that you need on your product. I would start with the General Product Safety Act of that country that normally shows quite a lot of labeling requirements. But each country has a governing body for a certain type of product. So if you are doing food or automotive parts or like any like ad hoc consumer products, there would normally be like a Consumer Protection Act or something like that, and labeling requirements would normally be on that site. Apart from that, there's a variety of sites that you could go to, but I would if you're not someone who is a lawyer like me, I'm not, I would get someone who understands legislation to research that for you.
Okay, very good. So Naomi is also saying, thank you, very important information. And we do have additional question regarding to the tea question. So I need to get an EU organic certificate to list an organic tea on Amazon. Certificates are issued to EU-based companies within the EU zone. And now comes the second part. As we are based in Japan, it's difficult to do unless we start a company in the EU. So do you know of a way to get around this?
So that's exactly that food business operator that I was referring to earlier. It's that representation of someone based in the country. We have some agents which we can maybe refer to you to help. So someone who's in the country taking responsibility for the item, and they would then be the one going down on the certificate as the EU-based organic entity of the EU-based entity for the organic certificate. So we can definitely refer you to a few companies who can help.
Okay, very good. So thanks a lot. Anybody who has more questions to Mari-Louise can write them still in. We finished with Q&A session for now, but we will ask all of the questions remaining in the end of this workshop. So yeah.
One more just popped up. What about barcodes? Are there many issues with barcodes that are not GS1 type?
That's more an Amazon requirement than what I know. I think Naomi, I'll definitely do some more research there. I know very little about barcodes. I'm not going to lie to say I do, but we can definitely do some research there to help. I think it's more an Amazon requirement than actual product compliance, but I can get someone to assist.
Yeah, Naomi, you're welcome to write to Mari to the email which you see on the screen. All right, so I know that we will have a next guest from Zee. It will be Bryce. He will be talking about Zee's partners. So thank you very much, Mari, and see you,
Thanks,
Bryce,
Jose.
in a
Thanks,
few minutes.
Augustus.
Thank you, Mari. And so I wanted to remind you one more time the whole rules. First rule is you have to like this video if you are watching. And second is that Zee is bringing us through the monopoly board. So we talked about logistics, about product compliance. Now we'll talk about partnerships they have made across the globe, so they can help you with a lot of different aspects which are related to global expansion. And then we'll have 2 more parts about import compliance and taxes. So 40 seconds break.
Zee simplifies global compliance and logistics for e-commerce sellers. Our complete import solution is the missing link between you and international success. Safeguard against delays and unforeseen cost when partnering with Zee. Enjoy first-time customs clearance and excellent customer service. Our Zee team is here to guide you every step of the way. We remove the fear and uncertainty from importing, allowing you to reach your true potential. Expand your empire with speed, ease. Zee.
And welcome to the third part of this workshop about global expansion of e-commerce and Amazon businesses. So we talked about logistics, we talked about product compliance, and our next guest is Bryce Cressy. Hello, Bryce.
Augustus, hi, how are you doing?
I'm good, thank you. And in your presentation, you will introduce to your wide network of partners, right? So
yes.
Yeah. All right, good. So I think the best would be if you could shortly introduce yourself, and we will see your slides afterwards.
Fantastic. Well, yes, I'm Bryce Cressy, as you know. I head up the partnerships and affiliates division at Zee. Not many people know about partnerships. It's one of the lesser known teams around, but it's actually one of the more important ones. I think the important thing about us is that when it comes to partnerships and affiliates, today I will be sharing with you on the partnership side. Partnerships are basically, and what we do is basically just working with external companies around us in the same industry who have similar kinds of clients for 2 reasons. The first reason would be for an external company to fill a service that we don't provide that our clients are asking for. So for instance, Mari spoke about product compliance, labeling. If there are aspects that we cannot provide on, which there probably isn't in that aspect, but when it comes to that, we will source someone and we will ensure that we have a partner to easily integrate with us and understand our clients' needs so that our clients are basically solved for in every aspect of their business. And then the other reason would be working with external companies to ensure that our service fills a gap in their service offering so that they are also fulfilled from that area. So those are the real 2 aspects of partnerships. And yeah, today we are going to go through Zee's partners and basically going through the questions that sellers need to ask themselves to ensure that they have basically their businesses set up for success, Augustus. And that's basically the gist of it.
Yes, perfect. So we can see your slides and we're ready to listen.
Brilliant. Well, on the topic of monopoly, we all know that the eventual winner of monopoly is the person who has the most properties spread around the board, grabbing some rental fees wherever your opponents land. And the next part of Zee's monopoly board is dedicated to ensuring that you have your monopoly of service and software providers set up all around the board that is your ecosystem. And I guess for the next 20 minutes or so, I'm going to let you in on some secrets of how to use partnership ecosystems to further your online business and some questions you need to have answered to ensure that you have your online business set up for success. And as Augustus has said, if you are an engaging member of the audience by commenting and asking questions, you could win yourself a prize at the end of the presentation. It is crucial for you as an Amazon seller to find companies that work together. Doing this not only benefits you from an information symmetry perspective, but also from a cost perspective. And let me break this down. When you are looking for multiple service or software providers that will provide you with something different to benefit your business, it can take time and effort. And not to mention the money spent if you choose the wrong provider and end up having to change due to a bad experience. And this is time that can be spent on more important avenues of your business that require your full brain capacity and time in order to thrive. And not only will partnership ecosystems save you time in search, but when you are working with companies that communicate well with each other, the level of effort required to deal with multiple companies lessens, as the relationship formed with the partners means they know exactly how to deal with the queries that come through and know the level of service that you will require. And this is effort that can be put into value-deriving aspects of your business. Now, probably the more tangible aspect a seller can get out of joining a partnership ecosystem is that partners share discount codes with each other. I'm not sure if you knew about that. Finding companies through partners can save you many a dollar. So you can go from spending time searching for the right company, where you can find multiple companies or service providers, all from one source at a cheaper price than if you had to find them by yourself, saving time and money. Now, let's talk about the e-commerce industry and how we at Zee have created the ideal partner ecosystem for an e-commerce seller to thrive. We'll go about this by asking some questions, as I said, from the perspective of a seller, and how you should go about answering these questions. Questions about every aspect of your business that you need to be answering to ensure that you have the correct setup for the sustainability and future of your online business. So if we have to go to the first question, it is basically, what do I want to sell? What product are you looking to sell? And how do you go about finding that out? To find out the answer, you would probably need to do some product research. This will enable you to know how to prioritize customer needs and will provide a decision tool for your entire product development team. Not only will this keep your products relevant, but it will also reduce the risk and cost of the product integration. And arguably the most important part of doing this is to clearly define your target audience. Some levers in this important step on the quantitative side is conducting search engine data analysis, as well as using retail statistics, e-commerce data, as well as advertising data, and naturally doing a bit of competitive product analysis. Some other forms that you can go for are some surveys, focus groups, but that's more on the qualitative side. It's just basically to ensure that you're hearing what your actual consumers have to say. You can also do a couple A/B testing advertising campaigns just to see which of those get more take-up. Of course, you may not be keen to do this all yourself. The guys over at Gemba can take this off your hands should you wish. I guess if we go on to the next question, the next question that a seller needs to ask would be, how do I source it? Sourcing has become more and more important over the last months and years as the production cost, raw material cost, and labor costs in China have increased, including shipping times and shipping costs. Additionally, with all the lockdowns, overloaded manufacturers, long waiting periods for production and logistics, more and more sellers are sourcing from outside of China, more and more in Europe, other parts of Asia, and in the Americas from north to south. Producing a product outside of China is becoming increasingly popular. Some may even say a unique selling point. Product sourcing can be a difficult process. If you're wanting to outsource this step, I think you should look to use a company such as Signify. They can source in China, including their own quality control, but are now also sourcing products outside of China, more than 50% of the time now. Having a partner who can source from the original Chinese producers, but also from alternative markets, can help for better products, cheaper prices, faster deliveries, and overall to be in stock with great products that leave you with a good margin. And they also have an offer for you as a seller listening to this workshop right now. It's basically a 30-minute free of charge product review, as well as a potential analysis and recommendation of the country where the product could or should be produced. And that sounds like something you can't miss out on, to be honest. Going on to question 3. The question is, how do I ensure it meets country regulations? But if you tuned in before me, listening to Mari speak on product compliance, you would have actually heard already how Zee can assist in this regard. So I'm not actually going to talk further on this question. The next question that you as a seller need to be asking yourself is, where do I want to sell it? This question can have multiple answers. Firstly, you need to distinguish 2 different parts of this question. Are we speaking country? When it comes to country, certain products sell differently in different countries, i.e., something that sells very well in the US may not sell as well within the German markets, or France, or Australia. Luckily, you don't have to guess where your product will sell best. Jungle Scouts Cobalts can help you out there. But you may also need to work in conjunction with Amazon for maximum results. How, you ask? Seller Tools has a free extension that uses actual Amazon data to find product opportunities. Seller Tools is built on top of the Product Opportunity Explorer, which was created by Amazon themselves. Unlike any other research tool in the market, Seller Tools is working in concert with Amazon, using real Amazon data. It works in the USA as well as the German marketplace at this stage, but Amazon is also expected to release the same functionality for which this tool, Seller Tools, will work in all major EU marketplaces this year. It is the most accurate, most innovative way to find product opportunities. But most importantly, who owns Seller Tools and can get you up and running? The answers to that is Carbon 6. They are the experts to chat to on this avenue. So we spoke about country. Now let's talk about marketplace. It's always possible to invest a lot of money in consumer studies and reports to figure out demand in a new country. But sometimes you need to take the plunge and get your products out there to really gauge demand. When done right, marketplaces offer one of the best toe-in-the-water opportunities to test new markets for your products, as you can quickly access your target audience where they're already shopping. The trick is finding the right local channels within your and making sure you can fulfill orders there in a timely manner. Once you're confident that there's enough demand in a certain country, based on how these marketplace channels are performing, you can take the step of increasing your footprint there. eChameleon can take care of this entire process, connecting your existing products to a range of marketplaces around the world. They'll help you figure out which marketplaces are suitable to your business and implement a customized process to get you selling there quickly and effectively. They've also given us a discount code, as I spoke about earlier, and sellers who use this code will get 30% off their eChameleon software fees for the first 6 months. And that code is ZEE303. So that is ZEE303. If you want that code again, just give me an email. My email will come up on one of the slides a little bit later. Another option, and probably the last option with this question, is Channel Engine. They can assist with helping sellers understand new channels as well as new opportunities, and can recommend horizontal and specific niche marketplaces in regions relevant to the seller's products, and assist with the market and product research beforehand. I mean, that sounds pretty intriguing if you ask me. And that is, where do I want to sell it? So moving on to one of our next questions is, how do I manage my e-commerce accounts? And when it comes to the answer to this, we're going to take a more specific approach in it. In that one of the aspects that many sellers struggle with is getting your account active, especially after a suspension. if it is code of conduct violations, fraud, counterfeit products, maybe even forged documents. It can be a bit of a hassle, but if you can't do it yourself, Riverbend Consulting may be able to help you get back on your feet, within reason of suspension, of course. Then moving on to the next question is quite an interesting one. It is, how do I finance my business? This is a crucial aspect of your business to get right. In order to start your operation and keep operating, you need to have your financial statements looking solid. Whether it be long-term capital or short-term liquidity financing, they all have their part to play. Businesses are funded most of the time via loans. Businesses can, of course, be funded via different investors, such as angel investors or venture capitalists or even crowdfunding. In all these cases, a percentage of the shares of the business will have to be given in exchange. And this is the basic reason that merchants generally prefer lending. If you're going the route of finding a working capital provider, there are a couple of options available. One of the options that come to mind is Myos. It's rather interesting because they take your product as collateral. That means that you can use existing or new inventory to raise funds. It also means that you are practically sharing the risk with Myos, since in the case of not being able to repay, Myos will use the inventory as a guarantee. There are also many funding providers that all help sellers in different ways. The way Payability do it is that they basically help sellers unlock daily cash flow to ensure that they have daily funding to stay ahead on future inventory purchases, as well as equipping them to have dollars on hand to outpace their competition when it comes to the rising advertising costs, both on and off Amazon. So really helping with your liquidity. Moving on to the next question. It's also another interesting one, also kind of on the finance aspect, but it is, how will my customers pay me? When collecting payments from your customers, you want two things. The first thing is making sure that you're getting paid the full amount. The second thing is to get paid as quickly as possible. And you'd think a traditional bank, whose only purpose is to hold, collect, and send money, would be great at this. You make the sale, you tell your customer to pay you, or if you're selling on Amazon, it's automatic. You provide the bank details and you end up short somehow or delayed. Some reasons may be various bank fees, transaction fees, forced conversions at high FX rates, FX exchange fees, or even banks that don't collect in foreign currency. Your client is paying you exactly what you owed, 1,000 USD, for example, and you end up with $950 in euros. 5% of your profits and operating margin is gone from all these fees. It would be a lot easier and faster if your clients could collect in their local currency, bypassing delays and fees altogether. That's what our partner Airwallex does. No fees to collect, hold, or send international currencies. And they also have an offer for you. And it would basically be, if you spend $3,000 in the first 60 days with your Airwallex borderless card, you receive $300 cash, as well as $50,000 in FX fees free. Not to mention that it costs you $0 in Airwallex fees to receive, collect, and send payments, and gives you an unlimited 1% cash back on all US domestic purchases. And as I said, since Amazon sellers would be paid by their customers through Amazon directly most of the time, a seller needs to find a fintech that can provide amazing savings and cross-border payment solutions for payments Amazon sellers need to make, like paying international suppliers, payroll, or even VAT and taxes. While traditional banks charge around 3% margins and FX transfer fees for cross-border payments, through the Zee partnership with OFX, Amazon sellers will be charged $0 FX fees and enjoy margins of less than 1%. When exchanging funds across international Amazon stores, OFX also allows online sellers to bring more of their funds home, avoiding the high fees Amazon charges their sellers. The OFX and Zee partnership provides Amazon sellers with the market's most competitive FX rates, financial hedging strategies, as well as 24/7 white glove service for all FX needs. I think between the two of those, you'll definitely find the provider for you. Moving on to the next question. It is quite an important one as well. Well, I mean, all the questions are important, but this one's rather interesting. It's how do I reconcile my sales? So once your sales start ringing up month on month, you need to have processes in place to manage the reconciliation of sales and expenses, ideally in a clean and automated fashion. Reconciling your sales is a key part of ensuring that your business is operating optimally and that you're matching the right revenue with the correct corresponding cost of goods sold, platform fees, ad spend, etc., to show your true profitability. Without going through these steps, it's difficult to make good data-driven decisions about managing and growing the business, controlling cash flow, etc., etc. A well-run e-commerce business can be a profit machine, but it only happens if you're keeping a close eye on the numbers. Sometimes you can do this in-house, but as you grow in numbers, it might be easier to get a professional to keep an eye on things. And CapForge would be the best for that. And if we are speaking about the nitty-gritty, then basically you book your sales daily to your accounting system against an expected deposit from each type of payment. Then when deposits occur, you will have to check that you received what was expected in the balance accounts. Usually, payment fees make up the difference. But if you are an omni-channel seller, then the best solution to communicate with your e-commerce platform or marketplace and your accounting system would be Bookkeep. They integrate with most e-commerce platforms for ease of reconciliation. Going on to a more different question, it would be, how do I protect my intellectual property? So let's go on a story. You've chosen a product and you've made it stand out. You've chosen a good, catchy name for your product, maybe a combination of your children's names. And from your searches on Google, it looks like the brand name is available for use. But then when you finally decide to register your brand name as a trademark, it turns out the name is unregisterable. It seems it's already in use or is considered too generic. If you have no trademark, you are ineligible for brand registry, and Amazon won't protect your brand. So what can be done? Generally, you'll rebrand, choosing a different name, which you can then protect by registering as a trademark. The two rules are, and the most important one is, don't choose a name that directly describes your product. Trademark examiners will not permit a name that is descriptive of the product, since by law, no single person or entity can be granted a monopoly to use a term or expression that's already established in a product's market or field. And the second rule is really no less important than the first, but it is to choose a name that is available, obviously. But if you want to find out more about the IP behind your name, you have to speak to Cabally & Co. They are the experts in this field. Going on to one of the last few questions, it is, how do I get noticed? How do I stand out from the crowd? Thousands of businesses selling similar products in markets all around the world. This alone is a scary thought. And with you being in the online industry, ensuring that your online presence is up to scratch is the make or break of your success. How do you even start this process? This always comes down to the three main pillars of marketing, being awareness, nurturing, and trust. Awareness is your marketing, where customers online come across your brand for the first time. In 2022, it's critically important to be what I would consider an omni-channel approach, being present on all platforms such as Facebook, Instagram, TikTok, Google, email, and even LinkedIn. You can find your audience on all of these platforms. You have to let your audience get to know about you and your products, and creativity is key here. Nurturing is what you do during the process cycle the purchase cycle of a customer, the part in between learning about your products and buying your product. Every brand's purchase cycle is of a different length, and that comes down to price usually, ranging from impulse buying cosmetic products to impulse buying furniture. The period is also key for optimizing the lifetime value of your customers. Having a good experience from awareness through to nurturing is where you can gain customers for life. And customer service plays a huge role in this and is often overlooked. Trust is a part of the business that is key in 2022. One of the first bits of information customers look for now is social proof and reviews. Leveraging those reviews online in your awareness stage will play a huge part in getting noticed online. Doing this can be tricky on your own, and you are certainly spoiled for choice in the Amazon industry and e-commerce industry in general, with many PPC, DSP, and other advertising providers making massive moves. But our choice and the agency that provided this guide is Hawk Media. Going on to the next question, it would be, how do I get my goods around the world? So you've sorted everything out up to this step. And now you are ready to start getting your inventory from your manufacturing warehouse to the fulfillment center that will distribute your goods to your customer. This process is probably the most important step. It has to be on time, it has to be cost effective and reliable, or your customers don't get the goods they were promised. Luckily, Zee can help you out here. And parts of it have already been spoken about, and the remaining parts will be spoken about after me. Moving on to the penultimate question, it would be, how do I package my goods, where to store my goods, and how do I get my goods to my customers? Once we have ensured that your goods are through customs and en route, the final destination before your customer is the next decision you have to make. If you're an Amazon seller, then the most common choices are FBA and FBM. And if you're an omnichannel seller, then choosing the right 3PL and fulfillment center in the right location can make a huge difference. Some things you need to take into account is the storage space required for your goods, the cost of storage, the frequency of fulfillment for a certain marketplace or platform, as well as the packaging requirements per marketplace, and then finally, obviously, the location of the warehouse. As storage space is limiting through Amazon FBA, many sellers are choosing to work with a 3PL that drip feeds to the Amazon FBA warehouse. But beware, not any 3PL will do this. Luckily, Fulfiller will, and they have warehouses in the UK, in the US, and within Germany. Location is equally important, as in the EU, choosing your country of import means choosing whether or not you need to pay import VAT and how easy your goods can get in and around the EU. If you don't have any experience in what a fulfillment center does, or you're hearing about that term for the first time, listen up, because one of our partners, Fulfiller, detailed how they go about dealing with your goods at their warehouses. And I'll be speaking from the perspective of a Fulfiller employee. We store all of our goods on Euro pallets. We arrange the pick faces to have fastest moving SKUs, easier to pick. Excess stock is stored in higher storage. We can then replenish the pick faces from above when needed. Once the order has been placed, the pickers who pick the order, which is checked against the SKU. The order is then taken to the packer, who will check the order again to make sure that the items picked are correct. The pack desk will have any instructions laid out by the customer on how they want their items packaged. This is where any inserts or kitting is done. And then once it's packaged, it's put into the corresponding courier carts ready for dispatch and delivery. And then once dispatched, your customers will naturally receive a notification. But with fulfillment, integration is key. A partner like OgoShip will integrate to your e-commerce platform and therefore automatically receive the order placed on your website and begin picking and packing the order from the stock that they hold in their warehouses. Once the pick and pack process is complete, the order will be sent out to the customer with the agreed upon courier provider. The entire process and stockholder are tracked and can be overseen in their unique order management system, MyOgo. OgoShip strives to make e-commerce logistics hassle-free and sustainable. And should you wish to use OgoShip services, going through us will qualify you for €500 off of your first stock update with them, as well as a 10% discount on your pick and pack prices. And then going on to the final question. And it's something that not many Amazon sellers actually think about, is how do I exit and try something new? Now you have been successfully selling your products and you feel like you've done all you can, and you feel like you might want to move on to something new, something different. There are businesses that offer founders the opportunity to seamlessly exit their businesses. Unibrands is one of them. They offer the opportunity for founders to stay involved in post-acquisition passion areas such as product development, so that you can still shape the future of your business, whilst Unibrands focuses on scaling the business into new markets and channels. The capital from the exit provides you with the opportunity to try something new, whilst allowing you to continue your legacy in your previous business or simply watch it transform from the sidelines. Now, I think it's very clear on the questions you need to be asking yourselves in order to have every aspect of your online business covered. There may be a few questions that are specific to your business and may change and may differ from the ones that are presented. But that is a testament to the ever-changing landscape of e-commerce and how critical it is for you to communicate with us to ensure that we source the correct software and service providers for you.
I wanted to ask, you listed so many great partners, and like they can cover so many different aspects of any kind of business. Do you have like this type of list on your website, or the best one they email you to this address which is on the slide?
So we do have a list on our website, but that does not populate all of our partners. Mm-hmm. I think for us to give them the best suggestion, they should email me directly to discuss any of the needs that they may have. If we have partners to assist them, we'll obviously make that introduction or give them the coupon code or the link to go to. And if we don't have something like that, we will find it.
And we added few of your mentioned partners also to the below to the description of this video as well. But of course, your list is much, much bigger to what you mentioned. So yeah, if anyone missed the name or missed, I don't know, anything, so please email Bryce to this email address on the screen, brycec@zee.co. All right, I see we're running out of time. Thank you very much, Bryce. And I know that we will have another speaker from Zee, which will be covering import compliance. So thank you, unless you had something else to say.
No, thank you for the opportunity, really. I think what we do is so important, and we really see ourselves as problem solvers for e-commerce sellers.
Yes.
So yeah, no, thank you for the opportunity.
Thank you, Bryce, and see you later again with someone else from Zee. And I wanted, while Zee is changing the speakers in the room, I wanted to mention that, as you understood, Zee is bringing us through the Monopoly board. We talked about logistics, product compliance. We talked about their partnerships. And next topic will be import compliance. And finally, in the last part, we'll talk about taxes. All right, we're on the part 4 of this ultimate workshop about expanding your e-commerce and Amazon business globally. And part 4 is about import compliance. Whenever you are moving your goods and importing your products from China or other European or North American countries into different region or different continent, there are always import taxes, import compliance regulations, and it is important to be on top of that. Zee can help you with that, and we have a presenter about import compliance. It's Fourie. I hope Cara, are you ready?
I'm ready. Hi, thank you so much. It's lovely being here. I can't
Yes,
wait to have a chat about import of record and import compliance.
I hope it sounds like you're passionate about this topic. So maybe you can introduce shortly yourself, and then you can just move on with your presentation.
Thank you. Thanks. My name is Cara. As Augustus has said, I work with Zee. I'm the general manager. I started about a year ago in account management, then moved into training our new employees. We're a growing business, so we were lucky enough to have a lot of new starters, and then moved more into the operational side. And now I serve as the general manager alongside with Mari and Rael. It's really challenging and I love it. And as you can see from the smile on my face, I love import compliance and I'm very passionate about this business. So I'd like to get into it. Let's have a chat about importer of record services and import compliance. So many people ask me, and especially my family ask me, what is an importer of record? When would I need one? Who are they? What are they? What are these unforeseen costs or compliance risks that you face when thinking about entering a new market? And I'm hoping that after my session today, you as an e-commerce seller will have clarity on who to partner with for your global expansion. Okay, so as Mari has mentioned previously when she spoke about product compliance, the big thing we've noticed with entity compliance and actually compliance in general is that no one really ever mentions it. When we think about expansion and expanding globally, import compliance isn't the first thing we think of. We've seen too many of our clients ship on something as simple as DDP and then get caught with unforeseen costs, stuck shipments or return shipments, and all of these additional factors that they didn't even think about. Why does this happen to us and what are we really missing here? As I said, when we think about global expansion, we rarely think about the associated compliance risk. Existing sellers feel confident in their local market and they're compliant in their local market. However, when expanding into a new market, you should be able to adapt a sense of flexibility in your business model to mitigate these unforeseen costs. If you are an e-commerce seller and you list your goods on Amazon, for example, the platform will not prohibit you from listing your good or listing your product on their marketplace if your entity is not compliant. Just get to my next slide. So this poses the question, do you need an import license or a VAT registration to sell on Amazon? And the answer is no. Amazon won't tell you this. Amazon won't tell you if you need a VAT reg to sell in Germany, which is something a lot of our clients don't know. They might have useful tools such as articles on Seller Central, but since the platform doesn't take any responsibility for the shipment arriving in the warehouse, the risk is on you as the importer to ensure that your shipment arrives safely. So this poses the question, is product eligibility and compliance the same as actual entity compliance? And I can tell you now, not at all. Amazon marketplaces, for example, are in different geographical areas, and many factors influence the import for a foreign importer. It's important to assess if there are any restrictions levied on a foreign importer or a product from a specific geographical area before sending your goods there. You might think that the main drive for your global expansion would be your profit margin, and that's important. And that's why you need to make sure that you partner with a trusted professional who will allow you to capitalize on your shipment and curb the risk of any unforeseen costs. The best partner, in my mind, that you should be partnering with when you're thinking about global expansion is the party in this whole transaction that would bear the highest risk or who would carry the most risk. When expanding into a new market where you don't have a physical presence, an IOR is that party who would take on the legal risk and responsibility of the shipment, making this the perfect partner and an excellent resource for you to use. When you tackle a new market, you need to decide what to look at first. Do you get your entity set up when you enter this new market, or do you figure out how you're going to sell that product in the new market? Our best advice would be that you start with your product. It makes no sense that your entity is set up to, for instance, import into Germany, but you can't actually sell your product there. So, as Mari previously mentioned, make sure that your product is eligible for sale in that country before you go through the hassles of getting your entity compliant. It will definitely be more effective and save you money by getting your product compliant, and then you look at what you need to get your entity set up. If we speak about entity compliance and what this might mean, we see a lot of our e-commerce sellers that don't know that you, for instance, need a VAT registration and something called a NIORI number when you want to sell in European markets. So let's have a look at those two things. We call this something pre-compliance. So what is pre-compliance? This is a process before the compliance process of your product actually begins. And we like to refer to this as getting a VAT registration and then getting a NIORI number. So what would that actually be? A VAT registration is needed the moment that you store goods within a country. It's a cost that you will pay on the import of the good. It can be reclaimed if you know how, and you can account for the VAT on your subsequent returns. A NIORI number is something completely separate to it and is something that you might need. So a NIORI number is a number that you need within the EU and the UK. It's called an Economics Operators Registration and Identification Number, for those who want to know what the abbreviation stands for, but it's needed in all customs administrations when trading. So where does this concept of an IOR come in? Let's break it down. Firstly, what is an importer of record? Okay, so an importer of record is a term used in customs law, and it refers to an entity who is responsible for ensuring that legal goods are imported in accordance with the law of that place. The importer of record, or IOR as we call it in a traditional sense, is the consignee or buyer in any international transaction. This is the ship-to party, as we like to refer to. The importer of record is required to have a local tax registered entity in the country of destination, which has the appropriate permissions and licenses to import. This is the party responsible for all your import formalities and compliance, as well as the filing of legally required documents and the payment of assessed import duties and taxes. So now your question might be, why would an e-commerce seller actually need an importer of record? To understand the need for an importer of record, we need to have a look at the basics of an international shipment. When speaking about international shipments, we need to delve deeper into the understanding that these are referred to as commercial and non-commercial transactions. The main requirement for both these types of transactions is that there should be an exporter and an importer. So let's take a look at a normal commercial transaction. We like to call it an international sales transaction. In a commercial transaction, there are two main parties involved, a buyer and a seller. In this scenario, the buyer and the seller are in different countries. So what that would mean is that you sell your goods to someone who is willing to act as a buyer. Thereby, one party is exporting the goods and one is receiving it at customs. That's easy. However, when you are an e-commerce seller and you make use of any form of fulfillment program, you'd want to have your goods stored in a warehouse that's nearest to your clients. When you then list these goods on an Amazon platform, for instance, you as the seller is responsible for getting the goods into that selling country so that you can store it close to your seller. That makes sense. This means that in this scenario, the seller is the exporter and the importer with no buyer listed. Because you as the seller will remain the owner of the goods and no sale has been made before or during the movement of the international goods, Amazon FBA are considered non-commercial international transactions. And that's where we see this little block on our screen. So we have a seller in country A, an Amazon warehouse, let's say in Germany, and then there's no buyer who will take responsibility for the goods at customs. So we like to speak of a typical, let's say, FBA transaction in Amazon as a two-step transaction. The first being you getting your goods to this actual fulfillment center in a new country where you don't have a presence. And then secondly, the commercial transaction where you actually have a buyer. With this non-commercial international transaction, where there's no buyer and no importer in this new country where you want to enter to, you have a little bit of a problem. So this is where an importer of record can come in. The importer of record is the party who will then take responsibility for your goods in the new country where you plan on shipping them to. So I hope that gives you an idea of why an e-commerce seller would need an importer of record. If you operate in the Amazon space, for example, Amazon have deliberately said that they will not act as your importer of record. So if there's no buyer, Amazon won't act as the importer of record or the importer on your goods, you need to partner with someone who's willing to take the legal risk of that import. And that is where we come in. So why would you need an importer of record? You would need one if you as the seller does not have a registered entity in the destination country where you plan on shipping to. You would need it if you have a registered entity, but you are not a registered importer. You would need it if you're a registered importer, but you don't have the correct shipment-specific permit or licenses. And lastly, you would need it if you don't necessarily want to take on this legal risk of the import. So in summary, when you think about global expansion and your growth, you need to assess, what am I tackling first? Product compliance or import compliance? I've now said, and I think a lot of people will agree and disagree with me, but we think product compliance is your first place to start. You might be compliant in your local market, but Amazon operates in various markets and in various countries. The new market will most certainly have different compliance requirements. And how do you navigate this? We advise that you partner and outsource your expansion. I know this can sometimes be daunting. You don't necessarily want to partner with everyone who comes across the street, but if you have a trusted partner and you partner with them for your growth, you will see your returns. We scare away from outsourcing, but when you focus on scaling your business, you will have initial setup costs. Rather plan for these costs beforehand than have an unforeseen cost when you try your first test shipments. When you scale your business, scale with a partner who knows the different marketplaces. It's important to stress that compliance and the term being compliant for import is different to being compliant for sale. Why bother with all of these difficult terms if you can have someone that can advise you for your best interests? When you scale and you start sending huger shipments and heavier shipments to this new country, it's important to understand that you have a higher risk of being caught out at customs. When you have this higher risk, don't let compliance be something that steers you away from your global growth. Partner with an internal service provider and mitigate the risk, and don't get caught off guard. I hope that gives you an idea of an importer of record and what we do. I don't necessarily think partnering with someone will affect your margins. If you plan for it, plan successfully.
Thank you so much for this presentation. Really loved your energy. I could tell you really enjoyed this topic and are expert in it as well. So yeah, thanks a lot for that. And we will take a couple of questions now, and then probably we'll have more in the end. So let's take this one. Regarding VAT, is there a difference whether I start selling on EU markets by using Amazon Pan-European program or a European Fulfillment Network program?
Yes, there is. Seller Central, I think if you'd like to read up more on it, is a very helpful tool in understanding Pan-EU and EFN. We have a lot of sellers that register for the Pan-EU program. I think it's a great program if you want to get your goods into the EU. Unfortunately, you will have to have a VAT registration in 5 countries. So all of the 5 countries which are part of the Pan-EU, because you will obviously store goods there. How it works with these type of fulfillment methods with Amazon is you register for Pan-EU, you send your goods to one country, and then Amazon decides in what country they will be storing the goods. Poland and the Czech Republic are countries that were added quite recently. You don't necessarily have to have a VAT registration there, but it is a great opportunity to get your goods into various markets into the EU. I have seen from the limited research that I have done just on my own accord that it might be a little bit cheaper to go with Pan-EU than with EFN if we look at fulfillment costs. So yeah, it has a VAT registration obligation, which might be quite administrative.
Okay, very good. Thank you very much for that. Zach has a question. If I'm shipping my goods from China to US through TTP, what do I need to do from my side?
Okay, so when you ship DDP, brokerage is included in that. The US is not necessarily a country where you do need an importer of record. It's not a legal requirement, but you act as the importer. So if your product is not compliant and you don't necessarily have the testing, labeling, all the stuff you need for your product, and that gets stuck at customs, you will be the one liable for that. So if I were planning on sending my first test shipment with DDP, I would make sure that my product is compliant. and that I make sure that it doesn't get stuck at customs. So I wouldn't send it unless I know that my product is compliant in the US market.
Okay, very good. So let's take another one. So products stored in Poland's warehouse. A German customer returned the items she ordered, and Amazon sent the returned product to German warehouse. We don't have German VAT. What to do now?
Ooh, I feel like I need to read that question again.
So basically, I think it's regarding to the VAT compliance. So if the products are initially stored in one warehouse, I think it happens sometimes with some of the network programs Amazon offers.
Yeah, most probably,
because sometimes the products do get returned to countries where sellers actually do not have VAT yet. So I don't know how does it usually work if they don't have VAT in that country. What happens in those situations, if you know?
It's a very interesting question. I'm actually not sure. I'll have to read up on it. You'll see me after this Googling how to fix it. If you're part of a fulfillment program, they will most probably send it to a country where you are registered in. So if you are part of the Pan-EU country or the Pan-EU program and you don't necessarily have a VAT registration in each of them, you won't be able to sell within that country. So if you don't have a German VAT reg, what now? I actually don't know. I'll have to look into it.
But we love those questions when, that's the beauty of like having webinars like this, when sellers actually can provide questions they have been facing, and probably it's a good way for you as well to get more case studies and learn more about the topic. So thank you very much for all of the questions. And don't forget to type in more questions, because after the last presentation, we will ask all of the questions submitted so far, so use your chance to do that. Okay, let's take one more then. What happens if I have German VAT but not EORI number? I already sent products to the Amazon warehouse.
Lucky you. We see that the issue happening with VAT and EORI is at a customs clearance part of the process. So it happens a lot of times that customers come to us and they say, oh goodness, I have a stuck shipment. What could have happened? And the first things we usually check is, does this client have a VAT number, and are they registered with an EORI number? I think from a customs official side, that's something that you can easily pick up on a commercial invoice. Do I have a VAT reg, and does this client have an EORI? So if you passed it, I think you're lucky. I would advise that in the future you register for the EORI number. You can do that through a partner or through Amazon Web Services, but I definitely would advise that you get one before you send the next shipment.
Okay, very good. So thanks again for your presentation and also your answers to the questions. We're almost ready for the next speaker as well.
Our next guest from Zee is Jonathan. Hello, Jonathan.
Hi, Augustus. How are you?
Oh, I like your wide angle. Like you're on the. Are you in Berlin at the wall?
No, just our office in the UK. So international our team, as they're based in South Africa, and I'm based in the UK.
Perfect. So in your session, you will talk about tax. Well, basically tax compliance. And this is the most probably boring topic for everyone. Like it's just headache. Especially especially in Europe. If you are not compliant at the beginning, then you can mess up your future business probably with the fines. All right, so I think if you could present yourself, and I think we see your screen perfectly. So you can introduce yourself and then move on with your presentation.
Perfect, thank you. So I'm Jonathan Matthews. I am the global head of sales for our compliance, or our VAT tax compliance division. I've been with the business now for 5 years. I've delved very much in the e-commerce Amazon space over the last 3 or 4 years. It's taken over my life. So I've got quite a lot of expertise to hopefully share. I think just to kind of dive straight into it, I know everyone's had a long day on this webinar with a lot of great information. So hopefully this doesn't put anyone to sleep, but we'll see how we can reduce anyone's understanding and hopefully make it a bit easier to move forwards with international expansion from a tax compliance perspective.
Perfect. So we see your slides. Yes.
Yeah, perfect. So just before you start the game again, we had to throw in the surprise super tax. Now, I think with international expansion, you have global expansion, complex supply chain management, international sales tracker, centralized compliance solution. These are generally the enticing terms that are used when expanding globally. And it's all we hear when someone's willing to go cross-border. Now, what we're not hearing is product compliance or import taxes or customs or VAT requirements or even ongoing tax obligations. Now, it often lands up, and I think everyone's presentation has somewhat shown that compliance is very much not required to expand, but in order to expand directly, there are things that may block you. And a lot of that comes down to whether it be entity compliance, product compliance, or tax compliance. And I think that's what I'm trying to summarize in this last presentation. So I think just to kind of move along, there are factors that need to be considered when expanding from a foreign tax perspective. The three main ones being, would you need a registration of a foreign tax is due to the required nature of the activities or the process for applying for foreign taxes, so who in theory could apply, and then what are the ongoing obligations that come with being tax compliant in a foreign jurisdiction. Now, what factors drive foreign tax? Now, it would be the terms of sale. So I think, as Cara mentioned in her previous slide, there's DDP versus DDU. A DDP sale will often immediately trigger a VAT obligation. The other factor to consider would be the ownership of stock or stock movements. So, for example, you do ship DDP into country A, and then from country A, you move stock to country B. That would also potentially trigger VAT obligations. That type of movement is somewhat similar to what happens in FBA countries, in that there are 6-7 European countries that Amazon store your goods. And then the third main consideration is the value on cross-border sales. So I think if we've got any US-based sellers on this webinar, you would be wary of that concept when selling to Canada. So below a certain volume, you don't have to register for Canadian GST. Above a certain volume, you may have to. So those are your three main drivers of foreign tax compliance. Now, does compliance obligation change based on the geography? Now, the simple answer is yes. Global taxes have a global nature to them in that they do change depending on the country. Now, the EU is standardized, and I think this is great news for the last year. It changed 1 July 2021 to a standardized EU VAT registration. And then, as per the previous slide, the three main factors can be used in differing criteria. So, for example, Canada may have a threshold of 30,000, the UK may have a threshold of 0. That's how you could use these different criteria to determine what's called as the effective date of registration. So the effective date of registration is the date you need to be registered from a foreign tax perspective. Then it comes to the rest of the world. The rest of the world uses these three main criteria in differing ratios. Now, as has been mentioned in the previous slides, we've spoken about such a variety of compliance. And I think the key question I often get is, do I need all of this compliance? I'm just trying to trade one different country. I'm just selling one product. And I think quite simply the answer is yes. You need both product compliance and import compliance, as well as entity compliance. And now I want to just try and delve into what makes the VAT return a bit different to the other compliance requirements. Now, your VAT return is what happens, or is what is required to be filled in each period. So this can be quarterly or monthly, depending on the country. But really what it is it's required to be filled in to account for foreign taxes, and you account for it on a periodic basis. Now, once a product is deemed compliant, so prior to even expanding, we determine that the product we're going to be selling in Europe does need certain compliance, and we've now ensured that product is compliant. We then move that stock, and then through Cara's entity compliance, we get the IORI number, which allows us to import. Now the product is in Europe and we start selling it. That's where your foreign tax kicks in. So all of these sales are recorded on your VAT return. Your VAT return also allows you to avoid double taxation. So double taxation would be whereby it seems like we're registering in one country and making sales in another. Where are those taxes accounted? Once we are registered in both a local and a foreign jurisdiction, it becomes easy to split out which taxes are owed where, and then less likely that double taxation on the same sales will occur. It also is the underlying document that allows for a foreign entity to trade or engage in business in a foreign jurisdiction. So this is the ongoing obligation. Now, as has been discussed, whether you do product compliance or tax compliance first, both are required. From our perspective, we often like to approach it in that we need to determine if your product can be compliant in the foreign jurisdiction. So simply put, can we sell your product in, or can you sell your product in Germany? Once that's been determined, then it is a question of timelines. So if one country is going to take a long period of time to become tax registered, you would want to start that process first. But if both seem like they'll take the same amount of time, then as long as the product compliance has been started and we know you can sell your product, then it's important to move through with the tax compliance element. Now, what does it take to be required or compliant in a foreign jurisdiction? So as has been mentioned in previous slides, we need an IORI number, so an import license, a VAT registration, and an importer of record. So it's those three obligations in addition to your product compliance that will allow you to be ready for import. Now, this is it can be a very complex question. Now, do I need a VAT registration to sell on Amazon? So I think just to start with, if you have a VAT number, you can be prime on Amazon. Now, Amazon in Europe, including the UK, has 7 markets. So 7 VAT numbers gets you 7 prime Amazon stores. So that's amazon.co.uk, .de, .fr, .it. And in order to use FBA, you need a VAT number, and that gives you access to Prime. Now, if you don't have a VAT number in a country, it means you can't use FBA, and then there are some sales that can be made whereby you don't need a VAT number. So for example, if you are a non-EU seller selling goods below 150 euros, which actually gets me to my next slide. Maybe I'll take it back a second. Can I stock and sell outside of the EU, but sell to customers in the EU on Amazon without a VAT number? So in theory, this is a US-based seller or a Canadian-based seller or a UK-based seller that has a VAT number or a GST number in their local country and is selling to users in Europe. So for example, to customers in Italy. Now, under certain conditions and with some consequences, there are certain sales that can be made. These mean that A, you're not prime. So for the German customer looking at your product, you're not prime, you don't get next day delivery. And the value of the sale needs to be below 150 euros. And the stock needs to be located outside of the EU. So in our example, I believe we've set that up. Those sales can be made on Amazon without a VAT number. Now, we could take that one step further where you are an EU-based seller and you are selling from one jurisdiction to others, again, the same criteria would apply. You just wouldn't be prime on the other markets. Now, how are these non-EU sales recorded? So these are actually accounted for via Amazon's IOSS. The IOSS means import one-stop shop, and it requires that the value is below 150 euros. In addition, the item needs to be located outside the EU at the time of sale. Now, what about sales above 150 euros in this scenario? So unfortunately, there's actually no good solution, and no good solution means you can't actually do it, in that once it's above 150 euros, there's no simplification that will occur. So it will almost get stuck at the border and no one is able to clear it. As the sale has been made, Amazon don't clear it in their name and the seller is not the consignee. So it lands up that that type of sale just doesn't occur. It's not offered. And if you were to do it without charging taxes, then you're running into a sales experience where the buyer needs to pay import VAT, customs, duties. That's not an Amazon experience. So you don't get that great customer service and you won't really be a prime seller on the top pages. You won't get great customer feedback. So it then leads to, if you want to sell above 150, you need to move stock from outside of Europe into Europe to an Amazon fulfillment center. And then we revert back to what was described earlier in the presentation, whereby you need your entity compliance, you need your EORI number, you need your VAT number, and then you can make your sales. Now, when kind of starting with this compliance process and looking into it, there's a couple of questions that you need to ask and to who. So I think I wanted to just summarize what those questions should be, or at least in that kind of area. Now, what, if any, tax obligations do I trigger by selling internationally? Do I need outsourced help? Can this even be done internally? So importer record or fiscal representation. If internal, what resources, expertise do I need? And what are the one-time versus the ongoing compliance obligations? So tax often has an initial setup fee, and then once you're tax registered, you have an ongoing obligation. So it's important to understand the difference between those two. Now, the age-old question, so in-house versus outsourced compliance. Now, with in-house, and I think this applies much more broadly than to just foreign taxes, but specifically to this, you need a finance function or someone in your finance team that has, or a finance team to begin with. You would most likely need multiple languages, or at the very least, the language of the country that you're going to be trading into, expertise in foreign taxes, and the required resources to be dedicated to manage this process. So it does land up taking quite a lot of time to be able to extract the data, upload the data, do checks, deal with tax officers 2 months after a submission. There's a lot of ongoing obligations. And then you have outsourced. Now, outsourced, you have, like I said, a one-off fee for registration. That's usually how that Global/Zee charges. A lot of others in the industry do the same. You then have your monthly compliance submission fee. So what that entails usually is the calculation submission of your ongoing VAT or GST returns. And then in addition, you may have ad hoc or consulting fees. So certain things don't land with the tax office, or the tax office queries or initiates an audit, at which point you may need to hire an expert to deal with that. So the one is more of a clear financial cost, outsourced, whereas in-house is more of a resource cost. And I think it's just important to always balance the two against each other, as nothing is free. So what happened in 1 July, and I think a lot of sellers on this webinar would be marketplace facilitator or selling only on a platform. And what happened in 1 July that allowed the marketplace to take ownership from a tax perspective and actually reduce the burden on the sellers. So 3 things occurred in 1 July. Now, the first one was that the platform or the marketplace facilitator became the supplier when they facilitate cross-border transactions. So what that meant was they were required to collect, report, and remit any VAT that was due. This does not move towards product compliance, and where a seller is established has a huge obligation or has a huge impact on these obligations. So simply put, what this meant was that the obligation shifted from the seller onto the marketplace facilitator to account for foreign taxes. Now, the second reform was that the one-stop shop, or OSS, which reduces the compliance burden, was introduced. This allows for a single VAT registration EU-wide, again, depending on the nature of the activity, and simply put, destination VAT is charged. Now, the OSS very much accounts for goods that are currently within the EU. So again, for many sellers on this call, that would be yourselves. Stock is cleared in Germany or France, and you now are required to be VAT registered in Germany or France, but it's on Amazon to charge VAT when a sale is made, collect that VAT and pay it over to the French or German tax office. The OSS also accounts for when your goods are sold cross-border. Amazon have their own OSS, meaning Amazon don't have to register in 27 EU countries. They only have to register where they have stock. So hopefully you can start to see how it's Amazon that actually share a large burden of this post-sale compliance part. Now, the third reform was very much around low-value consignment goods. So there was 0 to 22 euros. There was no import duties or VAT. 22 to 67, I believe, was no VAT but import duties, and then 67 to 150 was duties, VAT, and no taxes, and above 150 was taxes. So what this reform did was it just completely raised that low consignment value to 150 euros. And anything below that, destination VAT is charged, no customs, no duties, and you can sell to EU customers from outside the EU. So as described earlier, this third reform is the scenario where you can sell on Amazon without having a foreign VAT number. Now that would be below 150, located outside the EU, and sold on a platform. So the difference here is that with non-EU established sellers, the obligation falls on Amazon. For EU established sellers, the VAT registration is still required. The requirement is that the seller it's the seller's obligation to charge taxes, collect taxes, and remit those taxes to the respective tax offices. If you're selling cross-border as an Amazon seller that's established in the EU, you would need your own OSS number. There would be very little that Amazon actually has to do in the tax process. Whereas within the EU, if you're non-EU, the obligation completely falls onto Amazon. Now, what that does as a non-EU seller is in your country of import, you will have import VAT, and as long as with your freight forwarder or your courier and the additional services that Zee offers, we set up everything correctly to ensure that any import VAT paid is reclaimable on the next return. As a non-EU seller, your VAT returns will most likely have a whole bunch of nil-rated transactions between yourself and Amazon, and it's on Amazon's VAT return that the VAT is charged, meaning as a non-EU seller, you're very likely to be in one of two positions. One, a refund position in the country of import until your import is recovered, and in a country not of import, most likely a nil return, because you are making B2B transactions with Amazon, and because transport is included, that transaction is always zero rated. So lots of zero rated transactions between yourself and Amazon, and then Amazon is charging that to the customers. Now, this is happening immediately, and in the back end, Amazon were required to add in additional data fields in their sales transactions to account for these additional sales. And it's not something that you'll see or even be cognizant of, but what will happen is that when a sale is made and 120 euros is the sale and 20 euros is VAT, the seller will only receive 100. The 20 will be kept by Amazon as part of the collection, and that will be paid over to the tax office depending on the frequency of where that transaction was made. Now, how this works is really just that the obligation has been shifted. A lot of this comes from tax officers trying to ensure compliance. And in order to do that, it was a lot easier to go after the platform and to say, how do we move the obligation onto the platform and away from the seller? So this is how they've done it. They've created what is called a deemed supply. Amazon is then viewed as the party responsible for that to be paid, and it therefore almost forces Amazon to treat non-compliance more seriously. So I don't know if any of you have tried to open up accounts in the EU or are close to opening accounts without VAT numbers and trying to use FBA. I don't believe Amazon allow you to move your goods in there. There might be a short period of testing, but they're a lot stricter now in that they can't make this deemed supply transaction if you don't have the same local registration. That is the VAT requirement in order for this transaction to go off. Now, in Europe, or at least worldwide, there's a lot of big markets, Amazon specifically. So you've got Germany, Netherlands, and France are your major import destinations. They charge VAT at retail value, or import VAT at retail value. Those are your three biggest markets, Germany being the biggest, France being, I'd say, the second biggest, and then Netherlands just a really good import destination. France does offer a deferment scheme, so it can provide cash flow benefits, but it may trigger potential tax obligations in that in a country you import into, you need to be VAT registered in that country. It is, however, part of FBA, so there's no additional costs and they can be offset in terms of it's already an FBA country. With regards to the Netherlands, also a deferment scheme, so also cash flow benefit. It's not part of pan-EU, although there is an Amazon.nl, which doesn't require a VAT number. It does potentially add extra foreign compliance obligations to account for the import, as well as the export from the Netherlands to an Amazon fulfillment center. You also have the UK, which, whilst it mirrors EU VAT laws, having left during Brexit, it is its own market. It does require its own VAT number. Also has postponed accounting or a deferment scheme called PIVA, which again is a cash flow benefit. So you can clear your goods into the UK without having to worry about paying that upfront import VAT. Three factors that affect foreign tax compliance. Just to summarize it again, as the next markets I'm going to walk through have a varying degree of these three, which is the terms of sale, the ownership of stock, and the value on cross-border sales. So you can see that although similar to the EU owning stock triggers a VAT obligation, you do need your own EORI in the UK, and Amazon is liable for tax collection and remittance. So very, very similar to the EU, UK is the same. You then have KSA, Saudi, and UAE, which are, again, somewhat similar from a tax perspective in that if you own stock in those countries to use FBA, I think Amazon used to be called, or still is called, Soup, they require you to be registered immediately. Sellers are then responsible for all VAT obligations. So that would be where the seller is required to charge VAT, to collect VAT, and then to make those monthly, bi-monthly, or quarterly payments. There's no selling threshold. So the moment you sell DDP or even DDU, there's not really a concept of it. So you need to register. And just to repeat again, that Amazon is not the deemed supplier. So deemed supplier, they're not taking tax obligations on for you. And you then have Australia. So Australia, the threshold is $75,000. That's whether you have stock or not. It includes stock in FBA countries. As well, sellers are required and responsible for charging, collecting, and remitting VAT. You've now got Canada. So similar to Australia, it has a selling threshold, this one of 30,000. So that starts on a state level. So your first 30,000 could be to all states. You would then need a GST registration. Once you've sold 30,000 to each state, you then have 30,000 per state. So you can land up having 5 registrations in Canada. Not every state has a state registration. 4 of them do. Holding stock immediately triggers a VAT obligation. And for using FBA, similar to Europe or the UK or UAE KSA, you immediately need to register for GST and potentially HST, QST in each state whereby you're using an FBA. And Japan, your annual consumption tax compliance threshold is 10 million yen. You can register after a year, so a year after reaching that threshold. The more complex and immediate obligation is actually to have an importer of record. That is a requirement to get your goods into Japan. So prior to needing tax compliance, you definitely need IOR compliance or IOR support in Japan. And that is all the taxes we're going to do today. I think if anyone has any questions, I'm here to answer. jonathanm@zee.co. You can see it on the screen. And then also to the previous 4 presenters, thank you very much. I personally thought the content was great and I'm in the space. So hopefully all of our interested webinar listeners thought so too.
Thank you so much. Yeah, we indeed received some really good comments from the viewers. Zach was saying, it looks like everything we need is inside Zee. Well done, Zee. Very helpful information. And thank you. But now we have some questions for you as well. So let's see. Zach is asking, if I'm selling into US, what tax terms will apply to me?
So selling into the US from outside of the US or within the US, it really does change, but the tax terms would be GST, so it's general use and sales tax, would be what lands up being charged. It's somewhat similar to the EU in that when you use or you create a physical nexus, you need a registration, but then it's on Amazon to charge tax, remit, collect tax and remit. It's really only on the seller to file their taxes.
Okay, very good. What happens if Amazon sellers are not filing tax reports in the right time?
So ultimately, what's going to land up happening is you'll open up what's called non-compliance, and Amazon is often driven by the tax office. So the tax office will see a seller who's registered and there's an open on 3 returns and those should be closed or filed. Then the tax office will first reach out to the seller to say, hey, here's a deadline by which you need to compile and submit the correct returns. And then they would then potentially shut down or force Amazon to shut down the store. Now, with Amazon being the one that's charging, remitting, and collecting the taxes, it is less likely they'll shut down because Amazon's collecting and paying, but it is important for the seller to remain compliant. The tax office will, reach out directly to the seller, but may also force Amazon to shut down a store if Amazon are not what's considered the deemed supplier.
Mm-hmm. Okay, very good.
All right, so let's bring or I wanted just to give a recap. So Jonathan, you can rest for a minute. And I wanted to give a recap that Zee, which is a full one-stop shop, one full-stop shop for Amazon and e-commerce businesses to expand globally, so they can help you with everything, with compliance, with taxes, with logistics. And we had in this session, in this video, 5 different topics which we covered: logistics, compliance in terms of product, compliance in terms of importing, and then VAT and taxes. And finally, also we had a presentation about the partnerships Zee has. And we have here the whole Zee presenters. So we have a few additional questions which sellers ask. And I think we'll just go like rotating one by one, and let's see. Lisette?
Yeah, let's take the first one. So how can I check if the company my manufacturer is using for transporting the products is locally registered with Amazon and is able to give over the products to the warehouse? I think it's to Rael, I suppose.
Yeah, that's a difficult one. The only way you would actually find out is by asking them directly. I think it's something that you would need to check with them. That was kind of to the point that I made about your manufacturers or freight forwarders arranging what's known as a DDP shipment. In most international countries, that's not possible without local representation for import purposes, number one. And then number two is the delivery to Amazon once the goods actually arrive in that country. So those would be the two things I would manufacturer, either for them to communicate with the freight forwarder or for you to communicate with the freight forwarder yourself if you can.
Okay, very good. Thank you very much for the answer. So what issues I might have if I don't have insurance for my shipment?
So look, I mean, at the end of the day, if your products get lost, if they get damaged, if your product gets seized at customs, things can go wrong along the way. If you don't have insurance, that means that the cost of those products you're going to have to absorb. And if the clearance happens, if the loss or damage happens post customs clearance, you're going to be on the line for the duties and taxes as well. So we've developed an insurance product that gives you full marine cargo insurance from pickup all the way to delivery, which includes insurance for duties and taxes. So again, it depends how you want to run your business. If you are risk averse, you'll want to take our insurance. It obviously will impact your costings a little bit. If you're more risk on, then you'll take the risk of the shipment arriving safely, without it.
All right. I think this one is good for Mari. It's about databases in US for compliance. So is there any database from where sellers could check product compliance information based on product details for the US marketplace?
So there's multiple. It depends on the type of product that you are shipping or trying to get in. So every governing body has a specific database. There's one for automotive parts, etc. And it might be that database is not all encompassing, but there is a few. I don't know the exact names because there's so many. Each type of product is governed by a different body in the US, and that body has its own database or website that you can go to. So I would suggest starting with the governing body, so if it's automotive parts, who does automotive parts, and then researching from there. But the problem is that a database is not always all-encompassing, especially if you are if you're looking at multiple products like combined into one package. I would definitely not just rely on one database. And it might not also include the import requirements. So it might include the sale requirements, not import. So maybe just check a few databases, not only one.
All right. Actually, a question for Bryce. So you shared so many different partners. Do you have one partner or one type of businesses you refer a lot to Amazon sellers? Maybe there is like some unsolved problem which could be made in house of Zee.
I think probably the most often referred service is fulfillments or 3PL services. I think that is not something that Zee offers yet, but it could definitely be incorporated into our service because we are a one-stop shop. In the future, it might be necessary, but I think the way our partnership ecosystem is set up currently, we have a lot of fulfillment partners in all the locations that our sellers will need. And basically with the relationships that we have with them, the referral is as seamless as a direct integration would be, with in the future possible integrations with more of our premium partners being a definite possibility. In terms of other services that we generally refer to, I think it's really an ad hoc basis in terms of we generally refer on the same day that the client presents the issue to the CSE, to our account manager or our sales representative. And those services vary day to day. And in terms of a certain partner that we refer to the most, I don't think we do have that partner because so many of the services that are being asked for vary every week, every month.
Yeah, I think I have one question for Cara. So what should I ask from my logistics company to make sure they will be responsible for making sure everything is done correctly regarding importing products to the US? So what are those double check questions sellers could ask?
I think the first thing you need to decide is if your party who is your logistics company is the right person to ask. I think you should decide if you want to place the risk with them or if you want to partner with someone who really knows what's going on in import compliance. I think you should decide that first before asking.
Okay, very good. But let's say if they already chose somebody or they're between companies, then what could they ask to make sure that everything is really under control? Because we know sellers sometimes think everything is under control, but then again, they perhaps don't know to ask the right questions or, check some details. Perhaps you have any ideas? What could they do?
I think if you want to know, I would ask for something called the commercial invoice, and then any subsequent proof that they will submit to the customs broker on your shipment. So that would be a proof evaluation. How are they going to declare the goods that you send with them? Would it be on a cost or retail basis? Are they showing to customs the price of your goods that is the same that you think they should be? So proof evaluation is a good one. Commercial invoices, you can see how they list the different parties in the transaction, who's the owner of the goods, who's the importer of record, who's the exporter, who's the shipper. These type of details would be known to you as the owner of the goods, but I think that would be a good place to start.
Okay, very good. Sounds really good. So I think there's one question for Jonathan. So I am a small business. Would it be difficult for me to do VAT returns myself until I grow my business?
So you would be able to do it. There would be a certain difficulty to it with doing anything cross-border in foreign languages where there's certain requirements. It's complicated to get set up. There is enough information online that you may be able to do the ongoing obligation, but the registration process is quite archaic and old school in the sense that the tax officers don't really have a nice portal and they don't communicate with you if things are not fully completed or filled in the correct color pen, and there's requirements that you've got to fill it in blue in some documents and in red in others. So I won't go as far as to say you can't do it, but you at the very least need to speak the language. Most of the tax officers, converse in their local language.
Okay, very good. Thank you very much for that. And there's one question about EPR registration. So is EPR registration mandatory for all Amazon sellers who sell on EU marketplaces, no matter what products they sell or how big are their sales volume? I don't know whom from you is the best person to answer to that question, but perhaps you can choose yourself, Mari-Louise.
Yeah, probably me again for the product compliance. So the EPR is the extended producer responsibility. At this point, it's mandatory only from the 1st of July for any seller selling in France and Germany, regardless of the type of product or sales volumes, etc. It's going to become quite mandatory throughout. And there might be an implementation period, so maybe just look at that on the Seller Central forums. But yeah, I think if you are selling in France or Germany, maybe start doing that research already. It will definitely impact you. And even if you're starting out small, your intention is always to go big. So don't stop yourself now while you're still a small seller.
One more time, I think it's a good time to remind how Zee can help you. So I don't know, maybe Rael or Mari, you can just give again a very short overview how e-commerce sellers get help from you.
Mari looked at me and said, you can go. So I'll do it. Okay, cool. So yeah, we're a compliance, import of record and logistics specialist for Amazon and other e-commerce sellers. We see ourselves as a one-stop shop solution to help you expand your e-commerce business into international marketplaces. We're a lever of growth for your business. You know, in most e-commerce sellers world, it's either adding new products or adding new markets. So if you're ready to add new markets, come and see us, and we'll take you through all of the processes that we spoke about today and make sure that it's a seamless and easy process for you.
Perfect. Thank you very much. And yeah, that's it. So thanks again. Those who are watching, you will find the links below to Zee's service, also to some partners they mentioned during the presentation. This video stays forever there. If you missed something, just scroll back and find the timestamps below in the description. So thank you very much and bye-bye.
Thanks. Cheers.
Thank you. Bye.
And now I would like you to invite to watch other great video with Zee, which we recorded some time ago, and it will give you additional information on how to be compliant.